let's start recording here. So just to go through the trigger line settings that we're going to use on the range chart. The first trigger line is an 8-3, which is a very fast trigger. That's your white and cyan trigger. The other triggers that we have are just your regular old trigger lines. Just the 20 and the 5. And then what I did is I put the large multiplier to 1, Gary. So if you wanted to change your regular trigger lines, and what this does when you set it to 1, it makes the small triggers and the large triggers the same, obviously, because the multiplier is only 1. But what it does is it allows you guys to have the background color paint with the direction of the small triggers. So whenever the small triggers are crossed down, it's red. Whenever they're up, it's green. And again, this is going to be a very quick scenario for you. And you guys see we hit Fibs down here. So
do you have a template, or do I need to go in and change the actual settings?
there is a template which I sent to everybody. I don't know if you've loaded it or not. If you did load it, it's called NQ21 range 2023 with two small triggers only, for lack of a better description. And it's the same template technically as the other one that you have, Gary, running, which is the small super fast trigger template. The only difference is the large triggers are set to 1 here and they're set to 1.9 on this one. So that's, so you actually can see the large triggers with this one and you can't see them with this one. And what I want to do is I want to get rid of the large triggers first, because everything that I'm going to teach you is going to be done with these two triggers. It's not going to have anything to do with the large triggers. So after this week or a couple days into it, if you want to turn them back on, that's fine. But what I found, and this is me personally, when I have the other triggers on here, it creates a bias. And what would happen is, let's just say hypothetically, the large triggers are coming down like this, right, on this chart. And what would happen is you'd get up into this spot thinking, hey, those large triggers are going to help me do something. And it's not going to end up happening. You're not going to end up getting a lot of advantage for what I'm going to teach you for having that extra trigger on there. So let's go through the basics. Again, trend trades by themselves, I'm going to tweak them just a little bit for you guys. You're going to find this hard to believe because you have spent so much time on trend trades over the years and you guys know your trend trades. And again, if you have a strong trigger on the range chart, meaning, these two triggers are really strong, almost every time you have one bar down into a trend trade spot, the trend trade actually works. All right, who's trading? Who's
Not me?
Somebody's trading.
I have a question. So in my works, I'm sorry, in my workspace, I have Novak tutoring NQ main and Novak tutoring NQ backup. Which one should we be on?
They're the same.
Oh, okay.
Yeah, they're identical. And you should have 3 charts. You should have the 34.5, 13.2, and then the range chart.
12.23. Okay.
Yeah, so you've got 3 charts, right?
Yes.
And again, I've only got 2 charts showing here. When we start watching the live market, we'll spend more time looking at all 3 charts. But for now, we're just going to kind of look at this, and we're going to go through the basics. When you're going to do trend trades, and again, there's just a couple small tweaks that we're going to be doing. We're going to wait for a bare bones minimum close above and price action above the 8-3 triggers. And the reason that we do this, and you won't know it now until you see it about 30 or 40 times, whenever the 8-3 small triggers are going down, you damn near never win a trend trade. Once we get back above them and they start to close back up, you get in a little late, is what I'm going to tell you. And it's going to feel really weird because you're going to say, why didn't I just buy the mid band where the best spot was? And again, it's okay if you do. But I want you to compare the difference between when the 8-3 triggers are going with you in your results, and then when they're going against you and your results. You're going to find that your results are going to be significantly better when the 8-3 triggers are not hurting you, when they're actually helping you. A second picture to this, and again, look, this is the the one thing that's going to and you're going to see it. You're going to say, should I be doing a trend trade? And again, if you use a high volume area, maybe, but you're going to find that this right here is going to ruin your day about 9 out of 10 times. And unless you actually close above them, it almost always goes back into them and then fails. And you're going to see this over and over. We'll see it 100 times this week. So, again, I don't want to spend too much time with this trend trade business, but the only maybe exception is for me, and again, you guys can do as you wish, but whenever you have one-to-ones involved with the trend trade and you have a white paint bar down into it, there's two choices. You can buy on the way down into it, which I prefer with a white paint bar down. The only difference is when I get this white paint bar down, wherever it would make a second bar down would be my stop. So I'd have a very limited stop. And you guys are all familiar with the box, right? That, I'm going to blow this up just a little bit just to make sure that we're all on the same page here. You guys know the box that goes around the range chart. Everybody uses the range chart, right? For the most part.
Mhm.
Yes.
So there's a little box that obviously will draw where the next bar could be. And as you're going long on the way down, if you're going to buy a white paint bar down, you want to make sure the small triggers are up, and you want to make sure that you have a stop below. So again, this is kind of the only exception necessarily to trading against the 8-3 triggers. The other thing is location of the 8-3 triggers is going to be one of those things that you're going to pay attention to as well. Obviously, the farther away they are, you get at least a bounce. Theoretically, this is the better spot to go long after those triggers roll up. It's late, but late in winning 90% of the time is better than early and winning 50% of the time. It's just psychologically, it's going to be a lot easier. And again, you're going to be like, man, I can't believe I'm buying over here because the trend trade was over here. If you do it here, it's fine. This is the point at which you'll see this 8-3 triggers roll up and another signal, and it almost always keeps going after that. So again, it's just going to be a little tweak on your trend trades. And again, the reason, I've got one more here, but you're going to end up seeing the same thing. Trend trade long, waiting for a close above. Almost always when the 8-3 triggers are going down, you're going to get a down bar, and then that's kind of the spot where you're going to really freak out at this. You're going to be buying a down signal on these white paint bars a lot. So anyway, we won't beat that up right now, but you're going to end up seeing it a lot as we move into the white paint bar trades. And then finally, go ahead.
Sorry.
No, stop me at any time.
Okay, so I've been doing the reversal trade after Chris showed me an old video like this or whatever. And so I get confused, like when you get to a good bottom, right? And it turns around
right
on you. Come on. And it looks like a trend trade down.
Right.
And then you get two HVA lines. So I'm always like out right at the after I get my 25 or 30 ticks from the bottom. If I'm lucky enough for it to be the bottom,
right,
because I want to get as close to the fibs as possible.
Right.
when I see like for example, right now, right? Like the NQ is tanking or whatever. When it hits like a 15,855 and it makes that good bottom and it turns around, how do I know it's not just I should be selling the mid band on the large chart going down, or I should be holding it for a completely, like, like you said, 20 points or whatever.
Okay. So look, there's an easy answer to that. I've got it in here. And I actually posted this picture in the master class the other day, but you'll see that this is extremely extreme. I'm just trying to find that picture real quick. This is super, 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 super consistent. It works all the time, always and forever. But this is one that Jeremy did. And it's kind of the same situation where you're thinking, hey, it's a bottom, I'm going to try to be first. And what happens is when price is outside the outer bands, you can't go long, period. Anytime the price gets outside the outer bands, it's indicative of a strong trend, and usually the market will continue. As long as we don't get back inside the outer band, usually the market will continue down. So when we look at this current price action, again, this is really easy to see in this situation, but look, we had a top, things started going down, and you don't know how far it's going to go, but look, the market will always tell us the right thing most of the time. So when we get outside the outer band like this, usually the outer band becomes resistance as opposed to any type of support. And this was the exact spot where, Gary, you had your trend trade short. And anytime you get a signal from the outer band, usually it continues down as long as price is outside the outer band. And when we get to the other spot that you were talking about just now, Paul, right there, look at where the outer band is. This is the lower outer band. So we're not going long below the lower outer band. It's suicide.
Gotcha.
The other thing is, look at your triggers. Your 8-3 triggers are still down. Nothing says up at all. So the market's, when these triggers say more down, it's more down 90% of the time. So we're not trying to go long yet. And,
Okay.
who knows where, eventually these triggers kind of give out a little bit. So like right here, see how they're starting to give out a little bit? Generally, that's the look that's going to end up taking you back up to mid bands on the big chart, some type of resistance. And again, we're not going long in this situation because we don't have a good fib or there's no reason to go long. And it could still go short. But, again, general rule of thumb is if you're outside the outer band, you're not going long. I mean, it just doesn't work. So that's easy rule right there. And again, I've got that in here just a little bit later. The other thing, and again, the reason why we're not going long is this next picture that I'm going to show you. But look right here. Even though the 8-3 triggers are giving up a little bit, you have to ask yourself, what area are we doing it from? Right. So there's no support here at all. So, we're probably going to get down to 56 eventually. And, one of two things, we'll either get up to 84, where we'll start looking for white paint bar sells if we get them, or we'll get down to support and then we'll start looking for reversals if we get them. So we'll see what happens. Anyway, that's to come. So anyway, the next picture that I have in here is a warning pick. And again, the warning pick is it's geared because look, here's what's going to happen. And yes, I did turn off the yellow paint bars on my market flow. So these are some older pictures, but what's going to happen is you're going to start hyper focusing a lot on the market flow chart. And you're going to forget about the first rule, which is don't go short against strong triggers going up. And it's really, I've, probably 10 or 15 times last week, people were going short because of the market flow and they forgot to look at this chart. It'd be different if we were at the 1-to-1s and fibs, but you know, out in the middle of space, the warning is don't stare at your market flow chart when the large chart doesn't agree with it. So,
Right.
And again, I wanted to go back to this 2004 picture. You know, and again, the reason I go back to this 2004 picture is because it was really good logic back then. And it's still the same logic that we're kind of using with our 8-3 triggers on the range bar chart. We get to an area that we want to trade, and then we're not going to go short just because it's an area. We're going to wait for some trigger line help, and then we're going to have an easy trade to work out with. So anyway, the Nasdaq made support already. It fell out of bed. The other thing that, you know, again, this is an old picture, but there's no reason to remake it because it's so beautiful. We don't want to do high volume area trades or white paint bar trades when the triggers get past fibs. It's just not the most beneficial. And ultimately, when the triggers are going down and they're below the fibs, those are the times we want to use either high volume areas, trend trades, paint bars, stuff like that. So again, it's going to be a real easy look for you guys. You know, nothing that I'm going to teach you is going to be complicated. It's just going to be a lot, and you're going to eventually, you know, it's going to take a day or two, but by Wednesday, you guys will have all of this down. Just going on, you know, how it went last week. Now, the other thing is, you know, this is the look. So whenever you hit an area that you say, hey, it might be a top or a bottom. The idea behind what we're doing is to have this trigger line look on the range bar chart. And this is where the 8-3 triggers are going down. And we have the opportunity for 1 bar up, 1 bar down. So both triggers are crossed down. Everybody got that? Small triggers and the 8-3s. And this is the reason I got rid of the large triggers, because, you know, people are going to say, well, what about the large triggers are still crossed up? So I got rid of them. Anyway, it's not in this picture, but everything going forward won't have this large trigger in there just because I think it causes confusion. And you're going to see the same thing. You know, again, just I'm trying to build the look here of these two triggers, the smalls and the 8-3s. Generally, when you have a good top, you're going to get 1 bar up, and then you're going to be going short. And it's going to feel really kind of freaky because, you know, you're going to be looking for a white paint bar down trade, which we'll go through the rules in a minute. And almost always they bounce back up and make a signal, and that's the long signal is where you're going short most of the time. It's going to freak you out a little bit, and you'll get used to it. So there's 2 ways to do these white bar trades, and we'll get to those in 2 seconds. So again, this right here is going to be the biggest trades you guys are ever going to do. 20, 30, 40, 50, 60 points. And again, you never know how far they're going to go. So again, when you get a good termination condition, like, I don't know if you guys saw the, you know, so this is the definition of a good terminate. There's 2 spots. I mean, obviously up here, we've got mid bands and fibs, and all of our triggers are going down. That's the spot where we would be looking for some type of white paint bar trade to the downside. And then when we reach multiple fibs with 1-to-1s, that's the other spot. Traditionally, either a pivot stop out at fibs with 1-to-1s or 1-to-1s at fibs. And if you guys have watched the Nasdaq long enough, you know that they do a really good job of respecting. But, you know, we're trying to pick these couple of spots. And again, I want to preface this with, and again, I have a bit of an advantage because you guys have had software for so long that you know this stuff, but it's still worth repeating. whenever we get to a good termination condition. And again, this is where your chart reading skills will really come into play when doing these white paint bar trades. Whenever you get to a Fibonacci based indicator, multiple fibs, pivot stop outs, one-to-ones, that may reverse the market, that's where we get on our toes and we start looking for rules for the white paint bar trade. So like down here at the bottom or up here at the top. And when we're doing these white paint bar trades, just to go through some examples. Again, the rules are really simple. We want to have a large chart, and again, if you use crude oil or something like that, that's fine. But we want to have weak triggers at a fib or one-to-ones with pivot stop outs, some type of really good termination possibility. And then what we're going to do is we're going to sell any white bar that has the 8-3 triggers crossed in our favor. So they have to be crossed, and they have to be crossed on the correct side. So let me show you the do not and do first. Oops, that's not the right one. Hang on a second. All right, so this is the mistake you guys are going to make a lot. And again, we all made it in the beginning. I made it a lot, and it takes a minute to figure it out. But when the 8-3 triggers are below the small triggers, you're not going long with white paint bars, no matter how good the area is. You're going to end up losing like 9 out of 10 times. And what they do normally is they'll stop out the low. And then as these 8-3 triggers are getting above the small triggers, does that make sense right here? Whenever you see the white paint bar up from a good spot, we're going long. And, again, what you're going to find is that most of these long trades, and again, there's two different looks. The first one is both triggers are turning up, and you have to pay full price after a white paint bar. You're going to have to get in at the top and pray that it goes. If they're down a little bit, you almost always get one down bar, and then that's the better spot to go. And then you end up getting your up bars. And this freaked everybody out last week because they're like, oh my God, that's a sell signal. But when you keep in mind the areas that you're coming from and the 8-3 triggers, that's what we're trading. We're trading the white paint bar with the 8-3 triggers from tops and bottoms. You guys okay with that so far?
Yeah, the one thing I struggle with here is on the white bar followed by the red bar. You got a high volume line and the HVA. So would you put your entry point right above the HVA, or as you say, wait at the top of the white bar?
Again, it doesn't matter if you get in here or here. The only difference is if you get in here, you'll never miss a trade.
Right.
And these white paint bar trades usually run for 40 points, easy. I mean, 40, 50 points. So you might have a little extra stop in the beginning, and we'll talk about stop placements in a little bit. But, if you waited for a down bar, but it never came, you might miss 50 points. So again, determining how good the area is going to be very key for us. And it's also, the small triggers are going to help us out with that. So look, let's look at some examples. Again, you guys have already seen this one, but usually when the small triggers are still crossed up, you'll get a little bounce up and then you can go short. Ideally, we'd like to sell the high volume line on the white paint bar if we can get it. So again, because there was a high volume area down here and because the other triggers were up, we're probably going to get a bounce. But it doesn't really matter if you sold down here, you sold up here, it's, 15 ticks difference, 10 or 15 ticks difference. And, again, if you waited for an up bar, it's great. If you sold down here, it's great. As long as the top is good and it goes down 30 or 40 points, realistically, it doesn't matter.
Okay.
The only difference is you'll miss you're going to miss 65% of your trades if you don't go early. So, and you'll see it as we start.
Yeah, I think I sent you a trade last week where I waited until the third bar and it actually put my trade in on the fourth bar.
Right. All
And
right.
you said, I'll learn something this week.
Well, yeah. So look, this is another really good example of what I was just talking about. So again, look, we have an area of fibs and mid bands,
Mhm.
and the large triggers are above them. And we didn't really make it to the fibs yet. So again, we had a decent top that took us down, and then, you know, almost always this mid band and fib area holds. And what you're going to find is this happens an awful lot with these trades, and it's a difficult entry because when you're looking at this, you know, I want you to think about what you're actually looking at in the real. Here, I'm going to blow this up so you can see what we're looking at in the real world.
You talk about trend trade, the wick on the trend trade
No,
turns into like
we're not talking. Hang on a second, guys. Here, I'm going to blow this up. Let's see if my dogs don't go crazy. I have to go. All right, so let me show you what you're looking at live. So live, you're looking at this, and you're thinking you're going long, which is a difficult look for going long. Again, it's only when you back out and you say we didn't reach the big fibs and we have mid bands and fibs. We've got a little gap to the large triggers. So this is a decent area to trade from. And what you're going to find is, you know, you're going to have this look a lot at these bottoms. Pivot stop out on the small chart to a 1-to-1, and we're going to be going long right here. And when you go long right here, you got to see on the right edge of the chart there, it's going to be a very difficult thing mentally for you because you're like, oh, that's not a long. I can't trade into that. And you'll find when you get these good tops and bottoms, again, it's a matter of believing what this chart says off of a good bottom. And this is exactly what we're looking for. You know, again, we had fibs, 1-to-1s. But when we get this white paint bar up and the 8-3 triggers are crossed up, we have to go if it's from a termination spot. And again, if you waited for a down bar, you never got one. So again, this is one of those cases where you have to kind of pay full price. And again, once you know, you were talking about HVA lines and how they either make you nervous or what. We also have another trade, which is closing beyond an HVA line, and then you're going to get one bar down and one bar up. But we'll get to that trade in a minute. Right now, we're working on the white paint bar trade. And when you do it from an area, this is the expectation that you end up having. You know, I think this is, you know, I did this one. I took half of them off at the outer band, and then I took half of them off up here. And the reason we do this is because when we get these good areas, you know, we know where they're going most of the time, right? We know where they're going to stop, and we know where they're going to go. And without this, because Gary, it was you the other day last week when we were in our class, we were long or we were short from the top with this look. And you had actually posted a picture in the main room and said, there's no entry. And I was like, you will have one in a minute. So anyway, we had a white paint bar entry and we were short for the whole darn thing. And anyway, needless to say, there's two things that happen with these white paint bar trades. Number one, they're really, really good at calling the bottoms and the tops. And again, it's very important that our 8-3 triggers are physically above the small triggers. They have to be, or else you don't do the trade. But what happens is you're going to end up, you know, almost every single time you get a white paint bar trade and both triggers roll, you're going to get one bar down, one bar up, one bar down, one bar up, one bar down, one bar up. And again, if you guys have gone through the material, these are the spots where we're going to trail our stops. And, you know, again, not to kind of jump around on the PDF sheet a little bit, but, you know, when we're talking about trailing stops, especially after the white paint bar trades. We're going to be doing essentially, let's say we went short or we had a trend trade short or whatever. The trailing stops for you guys are going to be predicated first on the trigger lines. So, and again, I still have the large trigger lines on here, but they're not necessary. It's these two triggers have to be down together. And you're going to see the same thing happen every time. It's going to be one up, one down, trail your stop. One up, one down, trail your stop. One up, one down, trail your stop above the high. And it's going to keep you in the big move, especially in the Nasdaq, like 80% of the time. I mean,
Will the triggers bend up
so,
when it goes, when you get the bar up? Are the triggers gonna flex up, or are they just gonna stay put?
well, I mean, they're going to move a little bit, but as
Okay.
long as they're still crossed down, you usually get one up, one down. And you don't know, I mean, obviously, if you went trend trade short and you had to stop up here, you're just kind of waiting to see what happens. And anyway, whenever we catch tops and bottoms and the top is good or trend trade is good, this trailing stop logic is going, and again, I said this years ago and pointed it out years ago, but most people don't implement it. You guys are going to implement it all the time. And the other thing that's really cool is if you miss a trade, let me give you an example. This is this morning. So I went long. I'm going to blow this up. Actually, I'm skipping around just a little bit. Let me do one more for you guys. So again, there's 3 trades that you guys are going to end up doing. From a good top or bottom, we're going to have white paint bar trades. The other trade that you're going to do is HVA trades when all the triggers are going your way and we've got a good retracement percentage, which we'll talk about in a minute. The third trade you're going to see a lot with the HVA lines is an HVA breakout. And you guys may already have seen this and you can feel it, but we're going to have rules for it. Almost always, when you're going long and you have a breakout of an HVA, and when I say breakout, I mean a bar with lots of green dots and it closes beyond the HVA line. Everybody okay with that? You're going to see the same pattern continue. One down, one up, one down, one up, one down, one up. And this is actually going to be a trade for us. So you're going to see it a lot. And again, it's both trigger strong, close above the HVA. And again, this is also stop logic too. For example, let's say you were short at the HVA, which you probably wouldn't be with these triggers, but let's just say you were. The maximum stop on any HVA trade is a close above it. So we're going to see a lot of times where you're going to be able to get in with only 2 or 3 points risk. And when they go, it's going to be beautiful. And when they don't, you're going to lose. I think that's one of the biggest comments that I heard is the losers are going to be a lot less with what we're doing this way than the way you've been doing it. So, and again, this is going to give you a very structured ability to really focus in on stops. So again, look, this is the meat and potatoes of what you guys are going to end up really spending most of your time with right here. And again, let me go through just a couple more examples of these white paint bar trades. That's the one we did. Let me go through a few more of these and I want to just explain them so you can understand them. And again, look, whenever we get to fibs with really weak triggers, that's the only time you can basically buy or sell fibs. And weak triggers at a fib, and preferably if you get divergence from either the market flow chart or the 5-1 chart, this is your trade. And again, it's going to feel difficult in the beginning because you're like, oh man, I'm going short right into maybe a trend trade long. I'm not sure. And it's all predicated on this one white paint bar and what these 8-3 triggers are doing.
Okie dokie.
And again, it's going to take some getting used to. But
yeah, because Mark always says, wait for a clear path, and
forget everything Mark ever told you.
Huh?
Forget everything Mark ever told you. And
tell
again,
you
this is cool. Look, Mark's comment to me was the things that I'm teaching in here are so incredibly better than just doing a trend trade. He's doing this all day long. You guys don't see it or don't know it, but he's doing these trades all day long, either on the Nasdaq or crude oil. And I mean, he's doubled, tripled his profit in the last 3 weeks. So you'll see. You know, again, proof is in the pudding, and you guys, as we spend more time with this, you guys are going to really be shocked and surprised. Again, look, this is another example. Weak triggers at Fibs. We love to see it. And, you know, ultimately, that's probably not a real good stop. But again, ultimately, you know, we get the 8-3 triggers down and we get a white paint bar down. And I sold a pullback to the high volume area just because we were kind of at the outer edge there on the outer bands. So I had limited my risk a little bit more. But again, this is the look that you're going to see with these white paint bars all the time. And the other thing that's really, really, really beneficial to these, not only the large chart has to have something good for us, like weak triggers at Fibs or pivot stop outs, 1-to-1s. When you start adding in divergences from the smaller charts, it really helps a lot. You know, because look, 2 lower divergences, you're not going long, are you? Anyway, right? Hopefully not. So again, the hard part is you're going to be trading into something that's going to scare the living bejesus out of you almost every time. And it's going to freak you out a little bit. And it's going to be hard to, you know, hard to kind of pull the trigger into 1-to-1s and Fibs and mid bands. And you're thinking, oh man, that's going to hold on me. Again, it's going to take you 2 or 3 weeks to build full trust in this. But as you do, it won't take long. I mean, I think everybody had it down by Wednesday in the first group. Again, this is the same situation where we had high volume areas, but the white paint bar down. And again, there's 2 things that happen with these white paint bars down. You know, let me back up 2 seconds. And I went through this last time. I should do it again. When you look at the white paint bars, again, there's, you know, the white paint bars. And again, I don't know if you guys saw this in the video or not, but the white paint bars, they do 2 things. There's an alternating up and down. So if you get a down white paint bar, the next white paint bar will be an up white paint bar. And then the next paint bar will be a down white paint bar, and then up and then down and then up and then down. And the white paint bars themselves, and again, look, I'm giving you the logic, so I want you to be able to understand it. The white paint bar up or down represents a breakout in volume. So there's 2 components to a white bar. Here, I'll blow it up so you guys can see bigger, so bear with me. Again, I think when I blow it up, it makes it a little bit easier. So takes half a second, but I think it's worth it. Oops, where did I save that to? Not save it. File, save as, downloads. Yeah, okay, it's there. Huh, where the heck? Okay, there it is. All right. So again, for a white paint bar, you have to have 2 components that make it work. Number 1, you have to have multiple magenta dots for a white paint bar to be true. And the other portion of it is this high volume area has to close below this high volume area. So these little black lines represent where the bulk of the volume are on the bar. So it's not only a lower low in high volume areas, but it's also with sellers. And that's what creates a white paint bar to the down or vice versa for the up. And again, there's a lot of volume traders out there, right? So, again, we haven't been one of them, or you guys haven't been one of them for a long time. But again, when you get the right spots and you get the right condition with the triggers and a white paint bar, you're going to end up doing some really fantastic trades. I'm going to give you just a couple more of these real quick. The other thing you're going to see, which again, it's rare, but it does happen sometimes. Again, I think we can make a case for why this Fibonacci resistance is going to hold on crude oil, right? Triggers are down, we have resistance. And what you're going to find is sometimes the white paint bar is going to be the highest bar. And almost every time it's the second bar. Literally almost every time it's the second bar. But if it ends up being the high bar and you get the second bar, you can sell the second bar. And that's basically what you're trying to do with a white paint bar. Usually it's an antenna bar followed by a white paint bar, and then you end up going short. But if you get to the perfect spot and you get a white paint bar first, that's a really, 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 really good sign that we're going down. And then the confirmation would be a second bar, and then we'd go short. So anyway, this is rare. It happens like 4 times a week. That's about it. So you're not going to see that one a lot, but I did figure it's probably a good idea to have it in there. All right. So again, look, 1-to-1s with triggers way below it, pivot stop outs on the small chart. You guys getting the picture on this? Again, our sell signal is going to be after the white paint bar down, after the 8-3 triggers are rolling. Can you guys see that okay? Let me should I blow it up a little bit? And again, I want you to really, really, really think about this, because you guys are going to have, I would say it's mentally challenging in the beginning, because you're going to be going short into this. And it's going to irk the heck out of you. And you're going to be like, oh man, I'm going short right into 1-to-1s and mid bands and triggers going up. And again, it's predicated on the termination condition and the trigger condition, not this one little 1-to-1 over here. So think of it this way. If you hit a termination condition, are you going to do a trend trade long? No.
No.
So
Why
if
not?
you can't go long, we're going to go short. So every time you see this white paint bar and these triggers down from a termination, you're going to end up going short. And then look, it's not always 1 up, 1 down. Sometimes you get 2 up, 1 down. But for us, trailing our stop is going to happen after the down bar on the market flow chart. So again, it made a little deeper pullback and you get a signal short. Again, the thing that we want to see for continuation is these 2 triggers, the 8-3 and the small triggers, in our favor. You can trail your stop here, and then as it progresses down, again, you may have taken some money off over here at 1-to-1s or whatever, but this is going to be the precursor look for you trailing your stop again. So you may have your stop up here, and if they hit the high volume area and go down, or they make a 1 up, 1 down situation, which is usually what happens with any white paint bar trade that wins, usually is followed by a couple 1 up, 1 downs. And again, look, that's what I did this morning when I was going long. I wasn't around, but just, I'm going to show you what I did just so you can kind of see it, and it'll hopefully start to make sense for you here. Where the heck did that picture go? There we go. All right. So again, look, we're going to start with, this is the perfect look for a possible bottom on the Nasdaq. Can we agree with that? One-to-ones, multiple fibs, no triggers past it. So that's the good look right there. I was watching it with Mark actually this morning, and I was like, man, I said these white triggers haven't really come out, so that's not the spot. And then I was like, that's almost the spot right there, but the white, the 8-3 triggers aren't really crossed up enough. I mean, I guess you could have done it there, but that's almost pushing it. And then you'll see the same thing happen every time. It's almost down bar, and then the next bar is up. And again, this is where you close above your HVA line. And if you're not in, you can get in. And almost every time the white bar and the termination creates strong triggers, you're going to get a one down, one up. So I was late to the party. I really didn't get going until right here, but I was like, if we get a one down, one up, I'm just going to go long and put my stop below the low. And anyway, I took off 10 points. And then ultimately we got up to 66 is where I got out. And all the way up, it was one down, one up, one down, one up, and it never took out a low. So anyway, long story short, whenever you get these perfect spots, and especially when you get pivot stop outs and divergence, this right here, again, realistically, I should have been long here. I just wasn't awake yet. So you're talking about going long at 38 and getting out at 65. That's a lot of money. And you don't know how far it's going to go, but whenever we use this one down, one up logic to trail stops, usually it keeps you in the whole move. So, again, for this move that we were just looking at as the example, we hit resistance and we're anticipating getting down to support or maybe the one-to-ones. And as long as we keep making down bars with down triggers, we'll keep trailing our stops, and you'll end up with, going short at, just call it 64, 65, somewhere in this area. And then you're going to end up getting out at 42 or maybe even 38, and you're going to end up making 30 or 40 points on these trades. Where, again, maybe if you were doing just trend trades, you might have a trade right here. And for us, which we haven't got to yet, anytime you get, trend trade look, obviously that's a good thing. These are really favorable triggers for a trend trade look. Gary, this is where you're going to get in assertively on the way up if you weren't in already, or even after a signal. Hang on 2 seconds for me, guys. Okay. You guys are going to see all of these things are going to come together, and how they interplay together. The white paint bars from the tops and bottoms, high volume areas with the triggers agreeing, which, again, we don't really have to go through this a whole lot, but when I was running all 3 triggers on my chart, which you're still more than welcome to do, and again, I have found you don't need all 3 triggers on the range bar chart, because whenever the smalls and the 8-3 are like this, the high volume area is going to hold. And we're going to sell assertively at high volume areas when the 8-3 and small triggers are down. And, again, you're going to find if you do run all 3 triggers, you can go back and test this. Show me any high volume line where all 3 triggers are crossed down, and I'm going to show you about 85, 90% winners. Big winners. Big winners. Anyway, you guys will have to play with this later. It doesn't happen a lot. So again, this won't be the means. Go ahead.
Sorry.
That's okay. Go ahead.
So when you're trailing one bar down, one bar up, right? When you say that, we're just basically from swing highs. If it's a bearish trend,
yeah,
we're trailing swing highs basically, right?
Yeah. So in this example, if you were short at the high volume area because all the triggers were down and
Right.
it's a trade lug, you don't know how far it's going to go. I mean, obviously we want it to go to fibs or beyond. So all we're doing is whenever these two triggers, the small and the 8-3, are still trending together, you sit through the bar up. So, well, starting over here. So you're short here and you sit through the bar up, and then you're looking for a bar down, and then you trail your stop right above it. And then it goes down, and your stop is still up here until you get one up and one down, or even two up and one down. Once you get another down bar on your market flow chart, you're trailing your stop. And most of the time, if it's a really good look with momentum, it's one up, one down. One up, one down, one up, one down, one up, one down. So if you were short here, which is like 76 or 70, whatever, you're already up 20 something points. And almost every time the one up, one down gets taken out, almost every time it goes a lot further up. So
how many ticks behind do you put it?
What's that?
Is it 3 ticks?
One.
Just one tick. Okay.
Yeah. The only exception is if there's a high volume line, maybe a couple ticks above it, I might give it a few extra ticks. But without a high volume line, it's literally one up, one down, one tick above it. And you're going to find they don't come back. If they get it, they almost always go a lot further back up. Which, you know, again, who knows? You don't know what's going to happen. Here's the thing. You're going to now let the market dictate where you get out instead of taking profit, which is going to be difficult. I mean, look, at some point you can say, look, I'm going to take off most of my position. If I'm short at 77 and I get out at 55, I mean, it's 22 ticks. If you take, you know, a lot of your position off there, that's fine. And then look, ultimately, most of the time when there's momentum, they make it to the next fibs. So you're talking about another 15, 16, 17 points for only just this little bit of risk. So,
and also when you say one bar up, one bar down, when you mean one bar up, you mean the bar crosses through the 8-3 trigger lines up?
no, it's just an up bar, literally.
It's an up bar. Okay, okay.
Yeah.
Okay.
So this is the bar up.
I got you.
Yeah. And then when there's a bar down, we trail. And then there's a bar up. And then when there's a bar down, we trail. And then there's a bar up. And then there's a bar down, we trail after the down bar.
Yeah, that makes
Plus,
sense.
this looks really good for like when it's in a chop zone too, and you're thinking price should go up, but really it gives you a white paint bar and tanks. Then you know where to go with it.
Yeah.
I mean,
well, the 8-3 triggers almost
what I've
never
noticed
lie.
so far.
I mean,
Okay.
they literally almost never lie. So when they're going down, it's going down. And when they're going up, it's going up. Again, I've got a few more examples of this, but you know, again, it's basically small triggers and 8-3 triggers down. The high volume areas are killing it. And then this is another example of one up, one down, and how you trail your stop. And you don't know how far it's, you know, here's the thing. How many times have you been in a trade and say, man, if I only would have hung in there, I could have got another 20 points?
A lot.
A lot. Yeah.
Trust me, I know a lot. So this is going to give you the ability to get those other 20 points when it happens. And if it gets stopped out, it always goes a lot higher. So it's going to take a minute to get used to, but once you see it, you're going to be like, it's genius. There is one more thing that, again, if you guys have seen me do this already in class, if you get a good termination at the bottom, one-to-ones, fibs, whatever, divergence, higher divergences, almost always, if you use your Fibonacci retracement tool and the high volume line is exactly at a 50 or 618 or 786 retracement, you can buy at the line. At the line, on the way down, maybe a tick above it, and then you're off to the races. Now, if both triggers are up, you're buying the line anyway.
You know, where I struggle is where to start retracement.
From the low.
Yeah.
It's always from the low. So
But
whatever
at the same
the
time, it
Low,
just,
swing high.
the HVA line also matches the mid-band and the support on 13.2,
yes.
which would normally be where I would enter.
Yes. And when both of these triggers are up, you can pretty much buy with reckless abandon. And the nice thing about these trades are if it closes below the high volume area, you're out. So realistically, if you're getting in on the way down, you might have a stop down here where that, you know, where a new bar would form. And then as this bar goes up, you know how that box shrinks? You can literally bring your stop up as that box is shrinking. And then ultimately you might have 2 or 3 ticks worth of risk. And then guess what? It goes up and what happens? 1 bar down, 1 bar up, trail your stop. And then, you know, ultimately we get to outer bands and fibs, and I don't know where it goes from here, but anyway, this would be your entry and this would be your stop trail. So you'd already be break even plus, plus, plus. So you literally are, you're going to get into some no lose situations really, really quickly with this. Again, we could look at a couple more, but they're all pretty much the same thing. Again, a good top, same thing, just like what you were talking about. This is basically your momentum trade over here, right? And
yeah, I was just about to say that's
yeah,
a momentum trade.
yeah. And then
And
the high volume area just makes it easy, being at a 50% retracement from the top to the bottom. And because it's at a 50%, you can get in assertively. Now, obviously, if this chart helps, that makes it a lot easier too. But and then, you know, again, you're off to the races. I took a quicker target on that one, but who knows how far it would have gone with these triggers. You know, maybe could have broke 2 or 3 fibs. So
Question.
yes.
How do you know if it's going back to the mid band on the small chart or the large chart?
You don't. You never know what's going to happen.
But I'm
So,
saying with these trigger lines, right?
hmm.
Well, it will kind of show you. So you're saying that from now on, more or less, we're not really using the fibs as targets. We're
No.
using up down
Well, I mean, look, if you
for the
were,
most part.
let's say
Like,
hypothetically, this was a bottom and you were going long. I
right.
mean, I don't care I'm getting out right there anyway. I mean, it's 1-to-ones, pivot stop out, you know, so you can still take your money at a good spot. There's
No,
nothing.
I get that. I'm just saying in general because, like,
Yeah. Well,
the days where, yeah,
here's the thing. If you get a really good bottom, you know, ultimately my first, you know, I had some targets and then my last target was up here. And I ended up getting out over here anyway, just because I was like, I have to go eat breakfast, and it was lucky. But you know, a lot of times you get these really good bottoms, they just keep on going all the way up to here. So you don't know how far they're going to go. If you knew that, you wouldn't really be here, would you? You'd be clairvoyant, a savant, right? So again, it's just allowing the market to dictate what we're going to take for profit instead of us doing. So, you know, if we were to go back and look at this area, which again, I think we can all make a case for, this is a pretty good fib area to start looking for more down. Mid bands, fibs, downtrend, right? So I think we can all agree to that. So when you start going and looking at your range chart, and again, this is what you guys are going to have to do initially, is just kind of go back and, you know, see where these trades, let's see, this is a lot earlier, I think. Trying to figure out where that spot was. Man, I lost it. Hang on. That was at 5:40 this morning. So, you know, you have to kind of go back to 5:40 and say, what happened there? So at 5:40, when we look at our market flow chart, again, look, this is what happens. So this is a good example of what I was just talking about. So we have the right spot. Everything's fine. You're selling a white paint bar to the downside. And again, you never know how far it's going to go. So again, when you get a 1 up, 1 down, this is your stop. Is everybody okay with that? And remember what I said about one up, one downs, when they get taken out, they usually go a lot further. Now, it just so happened to go up to a high volume area and then, reverse off of that. So again, this is what I was saying when, the one up, one down, if it does get hit, it almost always goes a lot higher and you get a second chance, if it's a trend trade or whatever the case. And then again, this is another situation that we talked about, which is both triggers are going down. The high volume area usually holds. And then ultimately you get one up, one down, and you trail your stop to here. And then you'd get one up, one down, and then they would bump you out. You'd be mad. And again, they do this sometimes where they'll one tick the high of that every once in a while and then go down again. And again, usually I'll go short a second time, but and then ultimately, look, when these triggers are over, and this is where I went long. I went long right here on this bar, believe it or not. Why is my thing not working? So after this bar up, I went long. And the reason why is because we had white paint bar and we had high volume breakout and everything's strong, and you almost always get one down, one up. So I just waited for the one up and then got long right here with a stop below the low. And, again, got lucky. They went up a little bit. And then, believe it or not, I went short over here. I think you can probably see why. And then as it goes down, you get one up, one down, you get to trail your stop. And then you never know how far it's going to go. So again, you don't really trail your stop again until, this was Gary, your trend trade short from the outer band right there. So again, that's your next stop. And then ultimately one up, one down, this is your next stop. And then ultimately one up, one down, this is your next stop. And then one up, one down, this is your next stop. And then one up, one down, this is your next stop. One up, one down, this is your next stop. One up, one down, this is your next stop. And then you get two up, one down, which is fine. That's your next stop. And then ultimately, I think we hit some really major fibs down here somewhere. Anyway, but that little rule kept you in damn near all the way. And, it only takes a couple of these in a day where you're making 20, 30, 40, 100 points. So again, you don't know how far it's going to go. And it's going to take some getting used to the patience to wait out the up bar and then the down bar. But again, when we catch a good top or bottom, it really, 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 really pays very well. And you guys know if you have a really good termination at the top or bottom, and that's the reason we have the video from years ago that says what? If you have a good top or bottom, you can trade into fibs and usually the market will go a lot further. Everybody remember that video, right? What we're doing is we're jumping the top or bottom with the white paint bar. Or if we miss it, we use a high volume area. And then ultimately, the third trade that you can do if you miss or need something else is the high volume area breakout with both triggers. That's another trade that will get you the opportunities that you're looking for. Again, I think we went through a couple examples of those. And then ultimately, just like I did this morning, I didn't catch the bottom or anything, but I actually used the one up, one down as a trade. So as an entry. And what you will find is that if you've got a good top and you've got strong momentum and you get a one up, one down, you can add on to an existing position. Assuming you got room and, you're going to some bigger targets and you got a good top or bottom, but you can actually add on to your position using a one up, one down. Now, That's not a one up, one down. I'm not sure why that picture got in there.
Hey, John, how do we bring up the Fibonacci bars? I've forgotten how to do that.
F8.
F8?
So
F8 on both NT7 and NT8, or?
I think so. But again, look, watch. I'll go from the top to the bottom. And it doesn't really matter. This high volume area is not exactly at a retracement level. So all you have to do is literally just on Ninja 8 anyway, click F8. I don't know. I think it's the same. You might have to go just hit the pencil and then you should see Fibonacci retracements.
Ah, okay.
I think it's F8 on both, if I'm not mistaken. 7 and 8. By the way, we almost, and when I say almost, I mean like we're within days away of me testing out all of our new versions, our thread safe, multi-threading, all that good stuff. Anyway, long story short, we should have it.
NT8 just crashed on me, so I'm waiting for the break to reboot.
Well, the better thing is delete that workspace and then open up the backup workspace. Because once a workspace crashes on you, it's usually no good. I delete it and then I open up the backup. And then once the backup is open, I hit file, save as, and then save it as the main again. And it usually doesn't crash anymore. So anyway, so look, this is trend trade short. And, you know, another good example of one up, one down and high volume areas, right? So you'd have a stop right there if you were short. I think we can all agree trend trade short, right?
Yep.
Trend trade short, everything's going down. There's your one up, one down stop. And again, watch. One up and almost one down, not quite. There you go. So if you were hanging on for more, I mean, obviously, if you get to some one-to-ones, you can take some money off. But surprisingly enough, once you get strong triggers and one up, one downs, they go a lot further. And, you know, ultimately, if you're short trend trade, the one up, one down has kept you in this whole move. And now you can, you know, make some decisions when you get down to supports, obviously. But you got to see just, I mean, this is kind of a quick live lesson on the one up, one down. Trend trade short, which regular old trend trade short. And then one up, one down, one up, one down. And then ultimately, you know, we got to fibs, multiple fibs. So it's probably getting pretty close to the end of it. And again, you have to kind of weigh out, you know, is it worth risking a bunch of money, you know, when I get to the edge of fibs? And the answer is probably no, but, you know, 41 down to 09, that's a pretty good chunk right there. If you were going to hang on for more, this would be your new stop after a down bar.
What if you get to a good bottom, right? Like right now, and it broke through, and you get a white paint bar and the trigs are pointing down, then we can go short again, right?
No. If you're at a good bottom, the only thing you're thinking is exit or go long if.
No, I know, but like I tried to, let's say, forecast this good bottom, right?
Right.
And I got burned. No, I'm on simulator and I got burned, right? But
when you say forecast it, what did you mean? What did you do?
It looked like a good bottom. It was
So
a bunch of bids down there. That's basically what I do.
So what did you do? Did you go long?
Yeah, I went long, especially when it showed me the what do you call it? The divergence.
Okay.
And then it made another white paint bar, and now it's pointing down. So, is that a good time to go short?
No, well, not initiate a
Not
new
really.
short into a
Okay.
bunch of fibs. I mean, it says it's still going down, but
Right.
you know, again, this is the thing. You don't want to go, look, I'm just going to fix a lot of your problems. Never, ever, 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 ever go long when both of these triggers are down. You will get your ass kicked 9 ways to Sunday, guaranteed. You're not going to win. You're
Yeah.
not. You can try it as many times as you want. I've blown out a bunch of accounts trying it because I'm like, damn, it's got to be the bottom, you know?
Right.
And if you just wait for these triggers to get back above and white paint bars going up, you'll say, damn, that's the right trade. Now we may not go up past the high volume area. We'll see. But anyway, we break above here and this is where they'll come down one more time. And again, you see the difference over here, trigger wise going long.
Right.
And then, we're still outside the outer band, so it's not quite done yet. We try not to go long outside the outer band because it's indicative of a strong trend. And they have a tendency to keep going. However, again, look, we're not trying to trade just yet. We'll see what happens. But again, you'll get used to this idea. Let me get through this PDF and we'll get to
Sorry.
well, that's okay. Look, this is your week, guys. I will do anything on God's green earth that you want done. Whenever you want something to talk about, just stop me. Say, John, stop. Let's talk about this. I have a question. Or I'm 100% shifting gears. It doesn't bother me one bit. Okay. So now management with this. Again, this is one of those things that you're going to see. And again, it's, there's some management ideas I think that are still beneficial. Again, I used a white paint bar down here because it was a continuation short because it was from a perfect spot, but it's not really a white paint bar down trade. And the reason why it's not a white paint bar down trade is that the 8-3 triggers are not below the small triggers. So anytime they're on the wrong side, and this was the wrong trade. And I was like, again, if you trade into triggers that are against you, you don't really want to lose money. So number one, I recognized I was wrong, kind of jumping in a little early. And then number two, I recognize I'm trading into triggers, and if they break, that's fine. They sometimes they do. But if they don't, because I wasn't in the right trade, I wasn't going to lose money, and it did go back up. So again, management, if you get to an area that might hold, you still want to protect yourself. And maybe I could have put it above the one up, one down. It's a little better, but anyway. We're gonna go through so many of these. You guys are going to you guys will get sick of it. Now, using the one up, one down as a trade setup. Ideally, if you have a reason on your other charts, like Fibs, mid-bands, one-to-ones, or even one-to-ones on the range bar chart, you don't have to wait for the bar down to sell. You can sell on the way up. If there's not an area, you can sell after the bar down. But if there is an area, you want to sell the one bar up and hope for the best. And the reason we do this is because we have a very limited risk. So you're selling at the fib, and the risk is if you make 2 bars up, you'll get out and then recalibrate. And what happens is, and you guys all know this range bar marker that goes on the outside, you'll be getting in on the way up, and as this bar starts to go down, that range bar marker will shrink until it gets to the high of the bar. And then ultimately you've got to stop one tick above that, and you end up with very, very, a point or two risk, probably maybe 3 points. And then you start the process again, going down, one bar up, one bar down, trail, one bar up, one bar down, trail. And then you just let it kind of marinate and see where it goes. Everybody okay with that?
Mm-hmm.
So
yep. You can buy it at the fib, not at the mid band.
Selling at the fib, because these two, again, when these triggers are trending down, I made this picture when I had all three, but you really only need these two trending down, the small and the 8-3.
And you're just jumping in at a trail behind the pivot high.
you're jumping in at resistance.
At a fib. Okay,
And
got you.
yeah, so it's at a fib, anticipating the bar down because of the trigger line look over here. And look, if you didn't have an area and you said, hey, I need to get in anyway, you can always get in after the down bar. And then you know exactly where your risk is. So you can still do it with pretty limited risk, even after the down bar. Sometimes they get the down bar and they just run like a bat out of hell and you never get a little pullback. So again, if there's an area, we want to sell the one up, hoping that we get the one down. And you never know, but usually what it do?
Question, it's just because it's happened live right now on the NQ, right? On the range chart, it gave you an HVA. That's an HVA breakout trade, correct? Where that purple line is.
Well, here's the thing. That's a trend trade.
Okay.
Again, look, you don't want to, I told you guys are going to end up forgetting about your regular old trend trades. But I mean, look, when it's trending down really hard and the triggers are all going down, it's just a trend trade, right? I mean, wherever you like to see it, there, but it's just a trend trade.
And those trend trades usually screw me up because when I'm trying to get in, it turns into like sometimes like a range bound or something like that. So
well, remember what we said.
sometimes,
Remember what we said we're going to do for trend trades. Just let me go back to the PDF.
Okay.
What we're going to be doing with trend trades is we're going to be waiting for. That's the only wrong picture I have in there. I should probably get rid of that one. But we're going to be waiting for close above or the triggers to roll, the 8-3 triggers, and then we're going to take that trend trade. So if we look at it in the live market, just, again, we have to say, look, it's probably a trend trade. It's mid bands, lots of fibs, and the market's going down. Can we all agree to that?
Yes.
So if you got in after the close below the 8-3 triggers, how did it work out?
Very good.
Yeah, I mean, you could sell on the way up if you're really confident in it, which is fine. But again, doing it on the wrong side of the 8-3 triggers is a good way to get your ass kicked because sometimes they go further. Once you get back below them, then you get your down. And, again, we'll just do it live because, I mean, look, it's better live. So if you go short here, you're thinking fib, and then that's it. And if you wait for one up, one down to trail your stop, and then ultimately you get 2 up, 1 down, trail your stop, and then they just took out the 1 up, 1 down. But you can see where they took it out too, the high volume area. So again, that's probably the last hurrah for going down. And, I talked about, would I put it a couple ticks above a high volume area if, so again, this is one of those situations we talked about it, but, when you see it in practice, if you did get bumped out, you can always go short again. But again, when you're reading a high volume line, you're looking at these 2 triggers and you're anticipating whether or not it's going to hold. So looking at these 2 triggers, if you had a stop above it, it would be okay. But if you got bumped, look, if you did get bumped out and then you decided to go short again after a signal, this is your new stop. So you still wouldn't be risking any money to be short, even if you got in after the signal. And you'll find when they take this out, it's usually the end of the move and they'll keep going higher. So again, if you were short, we'd be looking for 1 down and then we'd have a new stop. And if we get the 1 down taken out, it'll probably be the end of the move. So without even looking at my other charts or fibs or anything else, I can pretty much determine what's going to happen just by looking at this one chart. And watch, we take out 58.25. Watch, they're going to go higher. I mean, almost always. And you'll start to see it and you'll be like, oh man, is it really going to go higher? Should I really be out of the trade? And again, you'll get used to this.
Question, if the large chart agrees, the top of that white pink bar would be an inch. Because those small triggers, oh, it doesn't agree.
Yeah, hang on.
No,
All right. Can you make a case for going long right here?
no, I didn't see that, so no.
Yeah. So we're probably going to end up going down to here.
I mean, there's weak triggers, but it's not at a spot.
Yeah, you have to have, and you know, the other thing too is you get into one of these super extended hard runs to the downside. I mean, again, this is a pretty good top coming off of 1-to-1s, and the triggers have rolled, and it's pretty much sell all the way down until further notice. And the nice thing about this, you know, getting in with 1 bar up, 1 bar down, or getting in trend trades or using high volume areas, you know, you can pretty much stay in the whole trend. Now they did take out the 1 bar up, 1 bar down right here. You know, but they took it out by a couple ticks. And can you go short again? You know, again, that's going to be personal preference. You know, once you start getting these triggers on the wrong side, we are losing momentum, just like every trigger line read that you guys had. Right. So again, I want you to see, you know, and if you were short, this would be your new stop with the hopes that it keeps going down. But, you know, again, remember when the small triggers get above the large triggers, we start to lose momentum. So anyway, we may be due for a bigger retracement here. We'll see.
But it also helps because you have the bullish divergences. So like if it's going to show you this white pink bar and triggers going down and I see a bullish divergence, maybe I'm not going to take the trade up, you know?
Okay, well, we're not going long because we're not at a good spot. So let's just get that thought out of the way. Yeah, all I said is that when you take out that high, you usually go up a little higher. Usually if it's in a downtrend, it goes up higher to give you another sell signal. So anyway, we'll watch it and see what happens. Now, based on what I've already told you, would you go short with these triggers right here?
Oh, no,
because it's going to go higher. I mean, it doesn't have to do anything, of course, but generally it's going to go higher. We're in a really strong downtrend, so they may change their mind here in a second. But anyway, we're not going long. We know that. If you were short, you know, you got bumped out and now you're just kind of waiting for things to line up again. So anyway, we're not going to worry so much about trading just yet. And again, I don't mind looking at the charts, but again, you can't ignore your large chart, no matter what. Again, don't start looking for counter trend trades, even if we get to here, you know, which is probably going to be a pretty good spot for a counter trend trade. But anyway, we'll see if we get to this box and then we'll see what happens. Okay, so we'll predict it early and say if we get to 24.50, we'll go look at our market flow chart. Okay. Now, all right. They're getting snappy. Did we have news today? I think it's already over, isn't it?
10 o'clock was something.
Yeah, okay. Anyway, look, short version is we took out a high volume area, and anytime you take out a high volume area, they usually retest it and then keep going up. Anyway, that's, you know, if we were coming from a good bottom, that would be a long trade for us. You know, it's not an easy long trade right there, but anyway, a good example of a high volume area breakout. And you see this bar right here, how many green dots there are when you break out of that high volume area. So you get 2 bars in a row with lots of green dots. Almost every time you'll retest that old high volume area, which actually became a new one, and then we'll go up a little higher. Now, I'm not a big fan of going long because we had such you know, a ridiculous downtrend, right? So I wouldn't be going long necessarily. I'm not trying to be a crazy counter trend trader. I'm trying to pick my spots at perfect areas to go counter. Does that make sense?
Yes.
So again, word of caution on this going the other way.
Question. So do these market flow bars, is that have the order flow integrated in that?
Somewhat. When I created them, I created what I wanted them to show.
Okay.
So, there's a couple components that I wanted to show. I wanted to show at a given price, was there more buyers or sellers? So that's what the magenta and the green dots are.
So volume at price, it's showing you.
Right. So the black lines are where the highest concentration of volume came in that bar. So, again, wherever the highest, most sellers in that bar were right there, or buyers, either way, you don't know. Probably the most sellers was right there at that price, and then that price, and then that price, and then this price. And again, what you'll find is that a lot of times with the market flow, the bar up is going to test that high volume area from the prior bar, and then you'll get your down bar. I mean, it happens a lot. And again, we're not talking about necessarily trading just yet. But again, we have a target in mind. We want to get down to this 24. So again, signal from the outer band usually will keep going to the downside. Again, it'll be easier when we close below these triggers to finish the move off to the downside. And again, it's hard because you're like, I want to go short. And if you go short against these 8-3 triggers going against you, you typically get your ass kicked 9 ways to Sunday. So again, this is going to be the hard part for you guys going, I know it's going down, and you're going to say it in your brain. I know where it's going down, and this thing right here is going to keep you patient. And then, ultimately it'll set you free once we start closing below it. Anyway, we'll just watch. They may have one more up in them after this. I mean, again, we'll see, but we pretty much have the anticipation we're going down to 24, right? So just fibs anyway. So you'll see when we close below and these 8-3 triggers roll down, if they do here, we'll probably finish the move. If we close up above the 8-3 triggers, then we probably won't. So anyway, now we should go finish the move to the downside. So we'll see.
Yeah,
And if they, the other thing too, look, I want you guys to remember, management, if you get a second higher divergence, you're still out of a position, right? So again, it feels late going short. And almost always when the triggers roll over and you're in a little bit late, it still keeps going anyway. So we'll watch it just for now, and then we'll finish our PDF. Does this make sense, guys? Again, it's really troublesome for a lot of people in the beginning. Again, we got to pivot stop out. So this if we close above this high, we got a second divergence already, but if we close above this high volume area, it's going to end up being the end of the trend for now.
John, can you hear me? Can I ask a question?
Yeah, go ahead.
So is the typical retracement versus longer retracement? Would a typical retracement be 1 bar on the market flow, or 2 bars?
It could be 1 or 2.
So 1 or 2 would be a typical retracement. Yes. If it goes past the second one, then that's more likely a signal not to take a trade.
Right.
Okay.
Absolutely. And, you know, again, look, for us, you still have to pay attention to termination conditions. You know, I mean, if you get pivot stop out with divergence and start closing above stuff, the trade's over to the downside. And you can see clearly that the market flow and the triggers are saying we're going to go higher. And, you know, again, I think we had a pivot stop out on our large chart as well. They went a little past it, but anyway, pivot stop outs, higher divergences. These are still things you guys have to respect, you know, from the normal rules. So, you know, again, you guys, this is the word of warning for you guys kind of off the bat. You're going to be like looking for one up, one downs. You're going to be looking for white paint bars. You're going to be looking at all these high volume areas. And then ultimately you're going to, you know, you're going to say, oh man, that's a regular old trend trade and I just missed it or forgot it. So anyway, it's going to take a minute to digest all of the pieces. So look, let's get through the pieces real quick. Again, HVA line breakouts usually are pretty good after a top or bottom, not in the middle of nowhere, but after a good top or bottom. And then we were doing the one up, one down triggers. And again, you know, you can use it as an entry, especially if you have an area. So, and remember what I also said about stop placements. So look, this was the, when I was getting in, and then this is after entry. And again, on the way up with a 1 bar up, if we made 2 bars up, I'd be out. So on this trade, I literally had 2 points worth of risk. And then ultimately, you know, if I make a second higher divergence, I'll have no risk. But this is the idea behind the 1 bar up into an area that's supposed to hold. You can get in at the area and have a very tiny little risk. And, you know, look, everybody, if you lose 2 points in the Nasdaq, is anybody's heart broken? I don't think so.
No.
I mean, it's not. And then if it goes to where it's supposed to go, you're basically risking 2 to make 18. Those are pretty
John,
good. What's that?
In the middle picture here, you move your stop above the HVA. Isn't it supposed to be above the bar?
Yeah, well, but the other thing is if you have divergence on the low and you make a second higher divergence,
Oh, okay.
that's going to end up
being above the, okay, I got it.
So I put it, you know, maybe it could be up a tick or 2, so I'd have to make a couple bars. But traditionally, if you make divergence and then a higher divergence and close above the reversal bars, it's going to go a lot higher. So I didn't feel the need to have any more risk in here at this point. But more importantly, I wanted you to see the 1 up entry at the spot and how little you have to risk. And then if it goes, obviously, you know, you get a lot for a little. And that's the point behind the 1 up, 1 downs when you get them. Let's see what else I got. Again, this is one where everything was going down on every chart. And I didn't get in because for whatever reason, I was on the wrong side. And what I was looking for is for it to go down, and I got in on a 1 up. And then I said I sold 39, but I meant to say 69. I got in after the down bar at like 69, I think, is where I got filled. And then ultimately it went down. I had a bar up and I trailed my stop and I got out here, which was really crappy because it went down another 20 points. So, you know, from 39 to 50, I mean, from 69 to 50, you're pretty happy with 20 Nasdaq points. That's $400 a contract. But unfortunately, this is before I was 100% comfortable letting it marinate to see how much further it would go. And anyway, needless to say, this one dropped another 20 points before it ever even had any stops taken out. So again, you know, for me personally, I'm still a work in progress. I mean, I've been getting some 20, 30 point trades and feeling really good about it. But sometimes I'm like, man, there's so many areas there. I just got to take my 15 points and be happy with it. And almost every time I do that, it keeps going. So I just want you guys to know it's going to take a lot of practice and a lot of reps to get comfortable hanging on when you trade into an area that it might keep going. Anyway, long story short, let's see if we got a couple other examples. We did that one. You guys get the idea though, right? So again, this was the after picture. This is the before picture. So pre-trade, I was looking to go short up here. And then this is what happened after. So I sold the one bar up because we were into multiple one-to-ones with the down market. Does that make sense?
Yeah.
So I sold on the way up, and then after the down bar, literally I had 1 point worth of risk to make at least 12. And it actually went all the way down to here. But anyway, there's, this is the part that you guys are really going to enjoy when you get a trend trade look and you've got really wide triggers and you can use the one up to sell the area and then have a teeny tiny little, even if you lose it, you lose a point. I mean, it almost makes no difference. Most of the time they're going to keep going though. And, for me, I even wrote bingo on here. So after the trade, it hit the target of 54 and actually went down all the way to some lower levels. But you can see trailing the stop behind the one down gave me literally 1 point. And then, sometimes they get 2 bars up range. So this was your question. Sometimes they'll give you 2 bars up and then go down, but you're still not moving your stop until you get a down bar. Is that helpful?
You want it to close, right? You want it to close?
Yeah. So it has to get to 58.50 and actually have a down bar, and then you'll put it 1 tick above there.
I also want to make sure, like, when you have all triggers going strong and those fast triggers are going with it, then the one up bar you can go ahead and enter. But if it's those fast triggers are going against the other triggers, then you'd be better to wait for a close below them.
Yes.
Okay.
And it's going to be difficult because you're going to get in late a lot. And that's
there's just so many combinations here at one time. I got to get it clear of which is.
Oh no. And look, I've put the word of warning out in the first video from last week, and I'm going to give it the same one to you. Trade on sim for a bit with all this, because you're going to see it, but you're going to see it after it happens in the beginning. And you're going to be like, dang it, I missed it. So again, I think, going into last week, Corey was trading. He sent in a lot of pictures, and in the pictures he sent, it was funny. The first 2 days he was slaughtered. He was trading Monday and Tuesday, and he literally got slaughtered, and he did everything wrong that was possible. And by Wednesday, because he was trading in determinations and he wasn't caring about rules. He was just trying to trade everything he thought he saw. And then once he actually slowed down, followed the rules, I think he made like 13 grand on a 2-lot over the next 3 days.
Oh.
So
throw me in that rare patch.
Yeah. So, and he still didn't do everything right, and he still made 13 grand. And that's what you're going to find is you're going to take a couple extra small losers with this. But, you've heard the old adage, let your winners run and cut your losers off quick, which is a total crock unless somebody tells you how to do it. So now you guys are going to know exactly how to do it. You're going to be able to let your winners run, and, still expecting this thing to go on a 24, but they got to get through here first. They make it difficult.
Well, John, on the chart right now, I'm looking at the 34.5. And we've got a pivot from space, which the mid-band normally acts as a resistance.
Yes.
So should I be waiting for the mid-band to clear before I do anything?
You should wait for the rules to be true. So what rule do you want to trade?
Good question.
So
I mean, I also I saw one down, one up on the 21 range, but now it's gone sideways.
yeah, but looking, again, you can't forget about everything you know. So again, right here, these are not the triggers to be thinking about short trades, right? And they're not. These triggers suggest we're going to go higher. So maybe we go to here, or maybe we go to here. You don't know where we're going to go. So again, we're not at a resistance area that we can judge and say, we're going to end up going down. Usually in a strong trend, they finish the move and they'll get down here eventually. But you guys have seen me draw these arrows. It's sometimes they go up to here so they can get a running head start and then end up down here later. So that may very well be what they're doing right now. They may say, hey, let's go way back up to a higher area, and then they roll over. So, again, for me, if we got to some edge of fibs and the triggers were weak, we'd be looking for sell signals here off of the 70. Again, we may just break through and keep going. I don't know what's going to happen. Oh man, I think I just crashed my Ninja. Sometimes when I draw too many lines on there, Ninja hates it. Yep, there it goes. All right, so what I was telling you earlier about, bear with me, workspace. So my tutoring workspace, I just killed. So I'll delete it, and then I'll just open up the backup. Or worst case scenario, if I'm having any trouble, I'd take the zip file and I'll Control C and I'll paste them back in. I Control V'd it. Sorry, my bad. Control C.
And of course it broke below just as your computer system crashed.
Yeah. And again, I still think we get to 24, but again, look, I don't want to guess as to what's going to happen. I just want everything to line up and some rules to be true. I mean, that's really all we're looking for, right? And you guys now have so many new rules that you're going to see at least 50. Look, when I tell you there's 40 trades a day in the Nasdaq, I'm not kidding. And, I challenged everybody last week. I said, go find me the 40 trades that are in the Nasdaq, and you can find 40 trades a day in the Nasdaq. So if you don't get a trade or you miss a trade, I have my stuff coming back up. If for some reason you miss a trade, there's always another one coming.
Oh yeah.
All right. Hey, while this is coming up, let's take like a 2-minute break. I'm just going to go grab a drink and make a run. I'll be back in 2 minutes here. And I'm going to go figure out the UPS guy at the front door that my dog's is going crazy on. So let's take a quick 2-minute break, and then we'll get finished up with theory, and then we'll go look at charts more and more and more. All right. Can you guys see my screen here still? Just want to make sure. All right. So quick 2-minute break. I'll be right back. All right, guys, I am back. Can you guys hear me okay? Shockingly enough, I guess everybody's not back yet. All right, so I know it's shocking, but we made it down to 24. We almost have everybody back here. Who waiting on? Gary, Paul, you back? Hamid, you back? Carl, you're back. Rain, I got you. I see you. Yep.
I'm here.
All right.
I'm back as well.
All right, very good. So again, I know Gary's, I see him walking around over there. We'll get him back in 2 seconds. This is another bit of stop logic for us. Sometimes, again, while you're waiting for up bars or one downs, one ups, traditionally, when you get two really consecutive strong bars in a row, like these two or these two, usually you can put your stop behind the second bar's low. If you're in a position where you're saying to yourself, I'm not sure where to put my stop. I mean, if you left it alone, it's not going to hurt you. But then, after up bars and then one down, one ups, you can really start trailing your stops. So at some point you may say to yourself, there's only so much risk I'm willing to take. And usually behind two strong bars up, they don't ever take that out. So that's some good logic right there. So I'll go over it one more time here with Gary. So Gary, can you hear me? All right. I got you. All right. So again, when you make a bottom and you're going long, whether it's at the high volume area or you're buying the white paint bar, wherever you're getting long, the hope is if we have a good bottom, you're getting long with the white paint bar. And, I said you're going to see this a lot, where you're going to get a down signal and then it's going to go up really quick. The nice thing about these white paint bar trades is that you're able to actually trail your stop after the one down, one up. So, again, there's a lot of stop logic in this picture. Let me blow it up here real quick. Just, and again, this is, I'll name it this time so I know which one it is. Again, there's a lot of stop logic stuff in this picture. So again, let's go on the assumption that this is a good bottom. Everybody okay with that? We're just assuming. And then this is the trigger line configuration that we want to see from the 8-3 triggers to buy a white paint bar. And a lot of times you'll get a white paint bar followed by a down signal, and then the market will go up again. So whether you buy up here, or you wait for a little pullback, either or, it doesn't really matter. As long as it goes up, it doesn't matter. I would prefer with a really good bottom not to miss a trade. So I don't care if it goes against me, as long as it doesn't get me. So when you're doing white paint bar trades, you're going to have to put your stop below the high volume area in front of the white paint bar to stay safe. And these are variable. Sometimes they're a lot higher, sometimes they're lower. But you know, if you're buying the white paint bar, this is going to be your max risk below this high volume area. So your initial stop will be down here. So again, if you buy a bar down, it makes it a lot less. If you buy on the way up, it's going to make it a bigger stop. Ultimately, after a white paint bar trade to the upside, the minute you get one down, one up, you're trailing your stop. So you immediately go to very little risk on these white paint bar trades. And then ultimately, you know, if the market goes up like it's supposed to, you know, at some point you're going to get 4, 5, 6 bars in a row. Traditionally, 2 consecutive strong bars up, you can put your stop below the low of that bar. They almost never take it out. Not that they can, but most of the time they never take out a strong 2-bar low. And then ultimately, you know, sometimes you get 2 down, 1 up, and then you're going to trail your stop. And then if you get 1 down, 1 up, you're going to trail your stop again. And, you know, ultimately you're going to be long from down here somewhere, you know, maybe at 17 or 18. And, you know, the hope is we're going to make it to 50 or higher. And, you know, we're just allowing the market to dictate where our stops are going to go instead of us just saying, I'm not going to risk anymore. I'm going to get tight on my position, or, you know, we're not going to have any random thoughts like that anymore. We're going to do what the market says, which is very difficult in the beginning because, you know, you guys are kind of geared towards take the money at the areas. You know, the worst thing I think that Mark does in his class is tell people to take 100 and go to break even. I'm working on changing that. You know, it's good for new people because it shows them that they can make a little money. But in the end, it's not the best way to maximize everything that we're doing. Again, we've already talked about trailing stops with 1 ups, 1 downs. Is everybody okay with this? It's, you know, it's going to take a second for you to get used to it. But once you actually start doing it, and after your first 50-point trade, you're going to be on board with it. So, you know, it won't take long. So again, once you start actually doing this and you start catching some of the really big moves, it gets a lot easier to relax. Now there's 2 things that we're going to use the outer bands for. Well, I forgot one. Sorry. We've already talked about this, but since it's stop logic, let's talk about it again. If you get long in a high volume area, which is the right thing to do, there's nothing wrong with that. If you close below the high volume area, it will definitely go a hell of a lot lower. I mean, almost every time. So if you get in at a high volume area and you get a bar up, you know, the temptation is to put your stop below the pivot. But ultimately, as this box starts to go up, you can have less and less and less risk because if it closes down below, it's going to keep going. And this one actually did. I lost 2 points on it, which again, losing 2 points instead of making 20, you know, the idea is to make 20 or 30, but if you can only risk 2 points on the Nasdaq, that's only $40. That's not a lot of money. Anyway, you'll get used to this and you'll see this a lot with the paint bars. And then there's 2 things for the outer bands for you. The first of which is the first time you reach an outer band, they have a tendency to go a lot deeper. And you don't know how far they're going to go, but remember how we said we're not doing trend trades on the wrong side of the 8-3 triggers? This is why. Because until you actually start closing above the 8-3 triggers, it doesn't go back up again. Very rarely. And look, sometimes you're going to say it's still worth it for me to go long because of my other charts. And what you're going to have to recognize it is if you go long on the wrong side of the 8-3 triggers and it fails, it's going to go a lot lower, and you're going to have to manage your position. So it's going to be a tighter management than a lower divergence most of the time. And then ultimately, it's the same thing again. If for some reason you said, hey, it's too good, I have to go long with a white paint bar down or whatever, you're going to see the same thing happen again. It's going to get back to the 8-3 triggers. And if it fails, it's going to go a lot lower. It just, and look, it doesn't actually go up until you start closing back above the 8-3 triggers. So it just so happens, maybe it's coincidence, white paint bar that closes above the 8-3 triggers, it goes back up again. White paint bar that closes back above the 8-3 triggers, it goes up again. And then just so happens, white paint bar that closes above the 8-3 triggers, it goes up again. So it's a different way of looking at the market as you hit the outer bands and there's some type of signal or market flow signal or divergence. This happens almost every time. And again, it's not
question.
Go ahead.
So can we use this market flow with the white paint bars for range bound or sideways? Like if it's tight, we do a breakout, or if it's got enough of a range like this, we could go with the trigger, or go with the white paint bar if the trigger on the right side of the triggers.
I mean, you can do anything you want. It's your money. Traditionally, the white paint bar trade, you want to see the 8-3 triggers going up, and you really want to see them on the other side. So white paint bar trade rules, again, this is the when you look at it, to have a white paint bar, you really have to have the 8-3 triggers crossed down, and traditionally they're going to be on the correct side of the small triggers. In this instance, they're both still down. And whether you do the one up into the, so again, I have a word of caution. This is the one. Nope, I lied. Shoot. Hang on a second. This is what you're going to end up with. Most of the time when you do a white paint bar above the 8-3 triggers, but you're not 8-3 triggers above the small, you're going to end up with it going up, and then it's going to come all the way down again. And then ultimately, this is the look that we really want to see, which is the 8-3 triggers on the correct side of the small triggers.
Yeah, that's what I was trying to say, was when it gets to the right side, the correct side, then if the range is big enough, it's worth a trade because you got room to move. If not, then if the large shot is okay.
Yeah, the other thing that you can do is you don't necessarily have to go long here. You may wait for one down, one up. And then that way everything's really going your way. And then you have a really good stop placement spot. So, again, sometimes the white paint bars just run like a bat out of hell and they never come back. And then sometimes they do, make one down, one up. So either way, if you got in early, your stop would be down here. If you got in after a bar down, your stop would still be here, but then it would move to here. And then ultimately, if you're not sure, one down, one up after the white paint bar is your second chance to go. So, again, if you miss your first chance or kind of chicken out of it, let's say, can we say that? Is that a fair thing to say? If you talk yourself out of it, then you can always have that second chance. And usually, look, you get a breakout close above a high volume area, triggers on the right side. There's a lot of stuff going on in here that's very beneficial for going up. The trick is not to do it on the wrong side of the triggers. Trading on the, let me go back to that other picture I had. Sorry. The outer band picture. The problem is if you do a white paint bar and you're on the wrong side of all of your triggers, you're taking a chance. And again, there are certain spots where you may say to yourself, I want to take a chance. And if you did it, I could be okay. Have you guys seen all of Siva's trades?
Yes.
This is Siva's trade. He waits for it to get to the mid band on the 21 range chart and then close above his triggers, and then he goes. I mean, that's basically his trade. So again, I'm not saying it's wrong. I'm just saying for what I'm teaching, it's not really the one. But you know, again, it's another trade you could add if you really want to. I don't know, you know, how many of these you're going to see in a day. There was 3 of them in one spot, so I was like, man, it's a really good spot to take a picture. But I don't know about the consistency of that. I mean, it just so happens that you hit the mid band in a high volume area before you get it. And it just so happens you hit a mid band before, and you break a high volume area when you get it. And it just so happens you hit a high volume area and you're closing above all your triggers when you get it. You know, does that help? I think it does. Anyway, I'm not teaching that as a trade, but if you took it, I wouldn't fault you if the large chart agreed with it. You just made up a new one, Rain. So we're going to call it the Rainmaker. All right. So anyway, look, we got to 24 like we talked about. There's one more picture. I know you guys have been through so many of these pictures, but we've already talked about this once. Outside the outer bands, you're not going short. You will get your butt kicked. Usually when you get outside the outer bands, it's indicative of a strong trend. And usually one down into an area and one up is a long trade. And then ultimately the outer band holds and the outer band holds. And then ultimately, look, we get inside of, you know, so assuming we hit fibs and good top and maybe even second divergence, once we get back inside, then you can start thinking about going short. You just can't go short over here, over here, over here. Does that make sense? And again, it's just one of those things that once we jump outside the outer bands, they usually strong trend. That's kind of a visual clue that we're going to have a strong trend. And then once we jump back inside the outer bands, usually they actually keep going.
John, are you saying that once the fast triggers get inside the bands and it close on the correct side?
Well,
so you saying when you say we get back in, you talking about price, or you talking about the fast
price
triggers?
bars and the triggers? I mean,
okay,
you know, it all kind of goes together at the same. I mean, the 8-3 triggers are really close to the bars most of the time, anyway.
Yeah, because you got that fib there helping you too. So
yeah, so assuming that you had 1-to-1s and weak triggers on the big chart, and then maybe you had a second divergence on your 13-2 chart and a high volume area that holds. If you're going to do a white paint bar trade, that would be a good spot for it. And then, you know, again, they made it down to the mid band and then they stopped. But all right. So we have now, and again, look, it took 2 hours to get through this, which is a lot. Now I haven't gone through this part of it, but I think this is mostly the same thing that you guys have seen in every plan. You know, look, for me, my goal is $800 a day per contract. With this method, you should hit that every day without even blinking. I mean, you could probably make 2,500 a day a contract without blinking. So again, I don't know what your goals and objectives are now, but they have just doubled or tripled. I think if you don't make 1,000 a contract a day with what I'm teaching you, you're not doing it right. So we'll see. Again, this is just some basic stuff. You guys know all this stuff. When every chart's fibs and triggers are the best possible looks, you know, range charts with all the triggers going up or down are good. Trend trade shorts should have a strong down configuration plus help from the 21 range small triggers. You know, this is all your same basic stuff. Good top, good bottom. 21 range small triggers must be weakened at least. And both small triggers crossed over on the correct side, which we already looked at this. Right. So again, at least the 8-3 triggers have to be below everything. If they both cross down, it's obviously a lot easier, but all right. Questions?
Is there any way we could look at what happened just now? Because
Sure.
I'm just curious about like entry.
Well, we were talking about 24 being the bottom.
Right,
right?
yeah. What is that?
So, we hit it 1-to-1s and multiple fibs. That's the spot we love to see. Now, the other part of it is we were over here saying we weren't going to go short yet. So what we have to do is go investigate over here and we'll see what happened and see if anything makes sense to get the rest of the down move. And then we'll see what happened after the bottom and we'll see what makes sense. So we'll go take a look at it. So is everybody okay with these spots at least? These two boxes being key spots for something? And then obviously we've got trend trade, but we'll.
At that 60% is where it had like the really looked like it took off.
Yeah. So, again, look, for us, when we have a good bottom, this is the area that, the white paint bar that we're trying to buy, basically. So we're looking for this one. And again, maybe they ran up really hard. And, again, the white paint bar also creates the high volume line for us. So if for some reason you didn't get in, if you did get in, you have to have your stop below the high volume area. If you said, hey, I wasn't quite sure, and it made a deeper pullback, again, this is where you'll see this happen a lot, where, you'll get retracement levels like a 618 or something right out of high volume line. Anyway, high volume line after the bottom is usually a pretty good thing. And then ultimately, we went up. We had 2 down, 1 up, so you'd be trailing your stop. And then, look, this is a very typical thing that happens. These 8-3 triggers give out on you right there. And it makes it very difficult for the market to continue up. And it's not that you're not going to go long, because we're going to be looking for a trend trade, right? So let's look at our large chart again real quick. And just see the spot. So again, I think when you see the failure here, I mean, I think we can all still agree we're looking for some type of trend trade in this circle area, right? And in doing so, this is where, again, 2 things come into play. We've got the high volume line retest, which is always nice. But then what we want to see is the close above the 8-3 triggers to get the rest of that trend trade to the long side. So probably the white paint bar going up and your small triggers rolling up is your next trade, which again, they're not making it easy. So, worst case scenario, you're trailing your stop here, and almost the same thing happened again. Your 8-3 triggers gave out and it went lower. I mean, it happens like almost every time, and especially high volume area. But we've made a good bottom and we're still looking for long trades. And if you just wait until the 8-3 triggers roll back up again, you get your next chance at longs. And right now you'd be, I'm not knowing where targets are, but these would be your stops. And again, you can kind of see the same thing happening here. We have to have another up bar right now, or else we'll end up getting stopped out of our position. And if we get another up bar, then the stop will go below this, and then we'll see how far does it go. Maybe it goes all the way up to here. So again, this is the live look of, I have no freaking clue how far it's going to go, but I'm just going to trail my stop behind it, 1 up, 1 down, and then we'll see where it goes. But do you guys understand this for trend trades? When the
So the
8-3
idea is to trail your stop really hard just in case you get stopped out, and just keep jumping in until you finally get the one that takes off.
No, I mean, look, we know there's a bottom, a good bottom. on our big chart. So we have to start with that. Okay, so let's start with, we made a good bottom, multiple fibs, 1-to-1s, and divergence in our triggers roll. So we're just looking to go long, right? So the first one comes from the high volume area right there. The second one comes from a trend trade here. And then the third one comes from a continuation here. And each of these three spots corresponds with, you know, high volume area, a deeper retracement, but then allowing the 8-3 triggers to roll up. So even if you're getting in a little late, you're still okay. And then ultimately the 8-3 triggers give out and you're waiting for them to roll up again. And then this is your next long. And again, you're only looking for longs because of the large chart, right? So again, nothing has changed yet. And again, maybe they go up, maybe they don't, but worst case scenario, your stop's going to be right in there and you'd just be stopped out. Now, what happened on the large chart? Was there any reason to take some money? I mean, again, we hit 1-to-1. So if you were long one time, you can maybe take some money at the mid band, twice at the mid band. Third time, you can take some money off at the 1-to-1. And then now we're waiting again. How many, do you guys trade the Nasdaq all the time or watch it all the time?
I do.
I
I
don't.
don't trade it at all.
No. Okay.
I'll have to
That
start
is
though.
exciting.
Well, there's a lot of money to be involved, but you know, these pink 1-to-1s have a tendency to be a pretty good profit target too. Now with this chart, we're probably still looking at going up, right? So this would be another situation where you're just kind of waiting for this chart to ease up on you, because if it never eases up, meaning these 8-3 triggers roll, then it's not actually going to, it won't go up. I mean, you literally have to roll them up before you're going to go up again. Now, we anticipate we're going up because of the large chart, right? So again, we're not going to necessarily, you know, again, hopefully you still see up. And again, now you get a white paint bar up, and then we should go finish the move up to, where do we say we might go? 77. So we'll see what happens.
So John, would you enter at the close for the white bar?
Yeah, I know it sucks and it feels like it's late, but
yeah, it does.
it is late. It's 100% late. And look, I'm not saying that you can't still assertively buy a pivot stop out trend trade over here, right? So let's not totally forget about, you know, everything that we know. So, you know, if you're still doing regular old trend trades, the close above is usually a pretty good spot for it. The difference is if you get in here, you got the white paint bar, you're in a lot later, but it never went against you. So, you know, again, it's a bit of a trade-off. You know, obviously when you look at your areas on your 5-1 chart, you know, if you were only looking at these two charts, bear with me, I think you could make a pretty good case for buying the pivot stop out on the 5-1 chart, right? I mean, that's just a regular old trend trade with a pivot stop out. So, you know, again, when we go long, you could go long here, you can go long here. We still have to respect termination conditions, right? So obviously we have 1-to-1s past a fib, which is a termination condition for us. So, you know, for me, if we get divergence from an area like that, that's the end of the party almost every time. So, you know, if it would have made one down, one up, cool. But anytime we have divergence from a termination and there's 2 bars down on the range chart, it's over. So
yeah, but you just made like 12, 14 points in a minute, you know?
Yeah. I
Even
mean,
though you took it late,
yeah.
it's still sick, you know?
Oh no, you have no idea how much money you're going to see. I mean, you're literally going to see $2,500 a contract a day. And again, sometimes you're in a little bit late.
Plus, it hit the upper mid band part of it.
Right.
Not to take money.
Yeah, so we obviously hit the outer band with a nice little signal. In worst case, you're out with 2 bars down in divergence. But again, not to forget termination conditions over here. And
yeah,
it's not that we won't still go up, we can, right? Even though we hit a 1-to-1, triggers got a little past it. Maybe they, maybe they stop right here and go back up again. I don't know. But I know that when I look at my range chart, there's no way on God's green earth I'm going to be going long yet. And I also start to think about where is that high volume area? Because that usually catches the overrun, like what Rain was saying, in that one picture. Let me see if I still have it up.
Hey, John, Rain sent a message that he got kicked out and wanted back in. Can you send him an invite?
Oh, there we go. I got him back in.
Okay.
Sorry. I guess that might have been Rain calling me, huh? I got him. Rain, you in? All right, he's.
Yay!
All right, what happened?
I had an internet glitch and I kept trying to get people to let me in, but I guess you were
Uh-oh.
too
Sorry,
focused.
I was focused up on the charts.
Yeah, I've been waiting 30 minutes, but that's all right. I don't care. We're all right. I'll watch the recording.
So
Thanks.
just I did record this, by the way, so you can go back and watch as well. But what we were talking about is, and just to kind of give a quick synopsis of, we got down to the 24 area that we were looking for. And look, it never hurts to do this more than once. So, the more you see it, the more you do it, the more it's going to make a lot more sense to you. So again, we got to the spot where we were kind of saying, if we put in a bottom, we'll be okay with it. So, when we were looking at our market flow chart, there was a couple things that happened. Number one, everything rolled down, and from here or here, we had the chance to get the rest of the move to the 24 area. Once we reach the 24 area, again, I don't have the same days back, so I don't have a bunch of big blue fibs and 1-to-1s here, but this was our spot. What happens is, once we get the 8-3 triggers crossed up and we get the white paint bar up, we're thinking long trades. If you get in at the top of the white paint bar, you pay full price. And you still have to hide your stop behind a high volume area. If you waited for a pullback to the high volume area, it's obviously a little bit better, but either way, this area for us, think of it as the white paint bar area. Watch, let me change this. After a good bottom, you're going to see this a lot. Think of it like this. A good bottom, white paint bar with the 8 range triggers, this becomes like a zone. And the zone usually ends up making the market go up. Now, unfortunately, we would trail our stop behind here. And eventually this thing kind of peters out on us, and our 8-3 triggers give out. So you close down, maybe you get stopped out. So you didn't make a whole lot. And then they retest the high volume area, which you'll see this happen. Actually, they hit it. This time they missed it by a tick, and over here they hit it. And again, I'm not saying buy the high volume area. What we're trying to do is buy after the 8 range triggers roll back up again. So again, think of it as, it's not a white paint bar area because it's a trend trade. Right. So again, we have a white paint bar, which is nice, and the triggers are rolled up, which is nice. But the logic that we're using, and again, it never hurts to go over this more than once.
That's HVA breakout, right?
Well, we're doing a trend trade.
Oh.
So let me rephrase this. So I'm going to clean up just so I don't have too much stuff here. So this circle right here, we're doing a trend trade. I think everybody, you know, that's your fibs hold with divergence, triggers roll. We're doing a trend trade. Is everybody okay with that? That's your regular old trend trade look. Everybody okay with that?
Yes.
Yep.
Now we had talked about delaying our trend trades until we close above our triggers or our triggers roll, one or the other, the 8-3 triggers, to save us from getting our ass run over, because you don't know how far it's going to go. So this is more like a timing mechanism where you end up being a little bit late, but it usually doesn't go against you. So when we're looking at this area, so again, there's 2 circles that I have on here, but what we're looking for is trend trade long, still trend trade longs. I know it's, you know, they made more than a down bar, but we're still going up based on our triggers. So we have a good bottom, triggers never rolled. We're looking for longs. So what I want to do is just break it down over here. This is the first one, right? Somewhere in this zone. And then they stop you out and you're like, God dang it, they stopped me out. I thought I was going to be a gazillionaire. And they come down and they just retest the high volume area again. They actually hit it. And once these triggers, 8-3 triggers roll up, we're free to go long again. So
you don't wait for it to cross the white bar, or the white bar has nothing to do with anything right now.
well, luckily it's a white bar, but you know, it's not a white bar trade. The white bar trade is the trade we're doing from the bottom.
Tops and bottoms.
Tops and bottoms. So white bars are a bonus, you know, but we're really just looking for these 8-3 triggers to roll up. The fact it's a white bar just is helpful. I mean, it's always helpful.
So it's 8-3 triggers.
So this would be your second entry, right? So you have your first high volume area entry, white paint bar entry over here. Then you have your trend trade entry over here. And then we hit the mid bands and, you know, they put in a bigger bounce. And, you know, again, you don't know what's going to happen. And if you were just trailing your stops, you'd have a stop trail to here. If you took some money at the mid band, that'd be great, but whatever. Let's just say you didn't. And then ultimately, you know, look, our 8-3 triggers give out again right here. So we're crossed down and it's not really going up yet, but we still expect up. So we're just going
John,
go ahead.
On the where you have the circle and yellow arrow and the white bar, don't you want to wait till the closes above the large trigger there?
No.
No. Okay. So you have nothing to do.
Well,
it is
this is not a white paint bar trade. I mean, it is a white paint bar, but all we're doing is waiting for the 8-3 triggers to roll up when we're doing a regular old trend trade over here.
Okay.
So it's a regular old trend trade, but we're just delaying the entry by a little bit, waiting for these triggers to come along. Because when they're down, you know, look, it could have gone down to here. Who knows how far it goes? Maybe it retests the fibs again and makes a pivot stop out. You don't know. So whenever we're below, let me do it with a circle just to highlight. So whenever we're below the 8-3 triggers, we're anticipating up still on our bigger chart because it's a trend trade long. But usually it happens from the high volume area. Once you start closing back above your 8-3 triggers, you're free to go long, basically.
So you wouldn't go long at the HVA line. You would go long after price is closing above the 8-3 triggers.
If I was going to go long at the HVA line, I would do it after an up bar.
Okay.
And go long here.
Okay.
With a stop right below it.
Right.
So again, that's another way of using the HVA to go. You know, and the other thing is we didn't measure out if this HVA is an exact retracement of something, but you know, again, I don't like to use look, I like HVA lines when the triggers on this chart help, the range chart. HVA lines help when the triggers are going up. And then when the 8-3 triggers are going down, the HVA lines pretty much suck. And again, it worked. That's fine. But what we're waiting for is the 8-3 triggers to cross up again to get our second chance at going long. And then we do the same thing again. It's kind of faded out and we get stopped out, and we're just waiting for eventually the triggers to go back up again, the 8-3 triggers. So you see the two circles. So this spot, we're still saying we're going up, and this is the spot where it goes from. And then ultimately, you know, that spot goes up like it's supposed to, which is nice. Again, it's the 8-3 triggers with more of a trend trade thought. Does that make sense?
Yes. Do you wait for the triggers to cross over the other triggers, or just to cross up?
You can, if you're being late, you
Yeah,
know.
no, I'm just asking.
The question is, after a good bottom, how comfortable do you feel with this area in reading your two trigger lines? So again, I think having the confidence that we have a good bottom in place that was confirmed by white paint bar moves, by trend trade moves, you know, they just came down a little further than, you know, that we wanted them to, but they did it anyway. So it doesn't really matter what they do. It's just our job is to read and react on what to do next. And then, you know, ultimately, you know, we talked about getting up to maybe 77. And then, you know, again, how many times do we have chances to go long on the way up? You know, and if you take some money and get back in and you got to do it a couple times, great. But ultimately, the white paint bar trade from the bottom was the bottom. And traditionally, this is the type of size move you're going to get after a good bottom. So ultimately, what, it's 50 points?
Especially with that double divergence with a higher divergence.
Yeah, and then a second divergence, higher divergence is really money for us. So, you know, it's long, 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 long. And, you know, again, when you go back to your range chart, this is the spot where you can go long again. And then this is the spot where you can go long again. And then, you know, ultimately, like I said, even if you get in a little late, the spot to go long again. And then, like it or not, the spot to go long again. And then ultimately now it's, you know, you get your one down, one up, one down, one up, two down, one up, one down, and, you know, maybe you get one more up here. I know we kind of hit some fibs, but again, you never know how far they're going to go. But, you know, once you get to, if you were long for any of these moves, I mean, you had a ton of money, right? So there's 1, 2, 3, 4, 5 opportunities to go long. And not one of them lost.
A lot of those are breakouts too, right?
Well, it's high volume line after a bottom. It's trend trade long after a bottom, trend trade long after a bottom, and then just more trend trades. I mean, it's just trend trades.
All right.
And I don't have a fib on my 21 range where you do.
Do you have 3 days back on your chart?
I have 10.
Yeah. So if you have 10, then number one, it's going to take forever for your software to load. So that's why I don't do it. That's why I only have 3. And I watch the fibs on these charts.
You're 10 back on those, correct?
What's that?
You're 10 back on the other charts?
Yeah. Yeah. And if you go 10 back, you're going to probably have the same fibs on your 21 range that you have on these charts. Should do anyway.
Okay.
Anyway, look, so here's a good example of you don't know how far it's going to go, but our trailing stop logic still has you in.
Mm-hmm.
So, you know, we had one down, one up, and now it's like, you know, do we go up to another 10 or 20 points? I don't know how far we're going to go, but again, look, there was 5 opportunities to go long.
Yeah.
Based on what we teach.
Go after all of them, right? We should go after every one of those. Like, Realistically, like what should we do? Trail the stop, go after
Do,
every single one with like a set
do you love money?
contract?
If you
I
love
like
money,
money. I like money.
why would you
Well,
not take them?
Yes. Okay, I'm just asking.
Yeah,
The coffee's kicking in. I'm just
that's right. So yeah, I mean, that's the whole point is if we get a good bottom, we want to just keep going long and long and long until something terminates. Because you never know.
Oh, I had a question. I'm sorry, guys. I have a lot of questions.
That's okay.
What is
Go
the
for it.
weight of the divergences on the market flow chart? Should we look at them just
Yes.
as strong as the divergences on the other charts?
Yes. Maybe even stronger.
Really?
I think they're very,
Okay.
very powerful.
on
Especially
the,
if you get a good top or bottom with divergence
On the market flow.
on the market flow. Because again, look, like right here, we had divergence from the high volume area.
Oh yeah, it had divergence. That thing took off like a rocket.
And then
Both
look,
those were
a higher
10.
divergence, which again, you know, we love second higher divergences. So it's the same logic. Divergence from an area, higher divergence, it goes up. Higher divergence, it goes up. Higher divergence, it goes up.
Wow.
We're still going up. So now look, we had one down. If we have one up, we'll have another stop, which will go, you know, wherever it, you know, if we go up from here, it'll be there. If, you know, right now it's down here, the stop. So we're kind of waiting to see. This is the hard part. If you're long, you're like, should I just take my money? I'm up so much money. Should I just take it? And if you do, it's okay. I mean, look, if you take 10, 20 points
That's fantastic.
and do it over and over and over and over, there's nothing wrong with that. It's just, you know, traditionally after a good top, good bottom. So look, where are we in relationship to the outer bands right now?
We're above them.
Yeah. So
Above it.
usually they bounce
Above
off the
trend.
top. They bounce off of the top of them and you'll end up with the signal here. So this is what we kind of expect. And it'll be an up bar and then you'll have a new stop. And then, you know, if they keep going, great.
Yeah.
So this would have been your stop at 72.75. Now your stop is at 77 or whatever, somewhere in that neighborhood. And if they get you at this point, you know, look, if you were long from what is that, 60, give or take, you're up 22 points right now. It's hard not to just take that money. This is going to be the biggest temptation that you guys are going to go through. It's like, I'm up 20 points. I'm just going to take my money. It's $400 a contract. If you think about our goals for the day, just that last one move is half of $800. So just that last move is $400. And how many shorts did we see on the way down?
You only need one of those moves to make a couple $1 million a year. If
Yeah.
You don't need more than one.
No, you really don't.
$500 times 20.
Yeah.
Every day.
Yeah. So now you guys see there's a whole lot more money out there than just doing trend trades.
And John, it'd be really helpful to see you do this live. I guess we're going to do that next.
Yeah, we'll do
Tomorrow.
it. Tomorrow we'll spend more time with it for sure. We'll just starting tomorrow, number one, what I want you guys to do really for homework tonight is pick a day and go do replay. And
today or no?
What's that?
Today looks like it just throwing money out the window.
I mean,
like today we're shooting fish in a barrel.
It doesn't matter what day you pick. You're going to have 40 trades a day. So at some point, I want you to go in and I want you to just do replay. And by the way, this would be your new stop. Got it?
Yeah. Up and down.
So you're still long. And you're just allowing them, you know, when they say let your winners run, cut your losers off short. This is letting your winners run. And, you know, who knows? Maybe it goes up another 20 points. I don't know how far it's going to go, but it's a pretty damn good look for continuation. So could it stop here? You know, again, I guess we could always watch our other charts and see if we run into something that is going to cause us angst. Right. So again, we hit another fib here and we've got weaker triggers. Are they going to break it? I don't know. I mean, you know, look, when we were up here this morning, after we made this 1-to-1 and we rolled over, I mean, it was short with lots of opportunities all the way down. And then once we actually made the good bottom, this is nothing but long opportunities. So, you know, 1, 2, 3, 4, I think 5 of them we counted. And I mean, that there's so much money in here. I mean, you go back to 6 a.m. I mean, there's a lot of movement in there in the Nasdaq. And again, this is why I like the Nasdaq so much, because it has more opportunities than some of the other markets. All right, so let's just watch. Again, 1 down, 1 up. You could even use it as another signal to go long or add on. But again, look, without asking where we're going and just allowing the market to dictate, we've already gotten to the next level.
But John, those arrows now have a new meaning, a more important meaning to us when they're in the right direction. The ones in the opposite direction, just ignore.
Correct. Yeah, because
You'd get in after the down bar, or like right now you would get in, or technically not.
Well,
Not a
probably
combination.
not this. I mean, look, this is where I would want to be in over here.
Right. No, I'm just saying for argument's sake. Yeah.
Yeah. So, but you know, again, once you get weak triggers on your big chart, you're not really looking to get new trades in. You know what I mean? I mean, usually your new trades with 1 down, 1 ups come when the triggers are stronger. Once you start getting really weak triggers, you can stay in a position, but you're probably not taking new positions at the end. So look, just letting the market dictate. Now your stop's at 92. So you're long from,
God knows,
call it 60. And again, look, this is where, you know, look, 15,800. I mean, that's a major number. So, you know, somebody may say it's a good idea to sell up here. And, you know, again, as we start to get weaker triggers, again, there's something else we haven't talked about, but, you know, you can kind of say, all right, this is where they're probably going to come down and take us out. We'll see. I don't know if they will or not, but there's something else that's going to end the trend almost every single time. If you get divergence from a 1-to-1, so look, this is where our stop is based on the 1 up, 1 down. If you notice, this is also going to end up being divergence probably from a 1-to-1, and then we'll end up going down a little further. That's all it means. It doesn't mean we won't go up. If we keep going up, our next fibs on the big charts are 09 and, you know, 17. We could still go all the way up to here without even stopping. So again, we've got a spot and we've got to stop, and then we'll see what happens. I don't know what's going to happen. Okay. The cool thing is you don't have to know what's going to happen. Once you get the right trades in the right direction and you start trailing your stops properly, you never have to guess. You just sit back and let it marinate. So again, you know, does the fib over here scare me? No, but I'm looking at it. If we get another up bar, we got a new stop. So there's our new stop, came up a couple ticks. It's almost ridiculous, isn't it?
Yeah. Well, we're outside that outer band too, and everything's breaking the other charts, so it's a breakout. And
we may get to 0950. Yeah. So I don't know. I mean, 15,800 may stop it. We'll see. But if it doesn't, then 09 or 16, 17, we don't have to guess. We just have to sit back and let it marinate. So you'd be long from 60 still, right? And that's basically where we said go long at 60. So now you're up 45 points on the Nasdaq. What does that add up to? $800 a contract?
Oh, yeah.
With more coming? Maybe. And then look, one more bar up. You know what happens, right? Trailing stops. And then we'll end up having a stop that's, let's see if we get that last couple ticks.
I think the market open was around 880.
I don't even know. I don't care.
Yeah,
all I
so-
care about is what's happening right here. You know what I mean? I don't
Well,
care where it
it's-
opened.
yeah.
All I care about is what is it doing right now and what should I be doing? So if you were long from 60, you now have 41 points locked in. Worst
Wow.
case scenario. I told you when you hang on for your first 40, 50 pointer, you're going to be like, damn, that's ridiculous. Now, we did hit a fib. So again, you know, this is where perhaps if you say, look, I can't take it anymore, I'm going to get out, you know, that's a spot. Now, is it going to go to 16 and a half? I don't know. But again, look, without guessing, let's just see what happens. Right. So look, if you want the extra 10 points, just take it, you know, because now we're risking 10 to make what, another 6 or 7, maybe.
Right.
And that's assuming that the red line stopped the market at 16 and a half, which they don't have to.
You could use this to scale in and scale out. Like use your targets to scale out some, and then on those pullbacks, when like those one bar down,
One bar up, add
scale
on
back
more.
in, and then you know.
And look, this is a really good spot over here for a one down, one up.
Yeah, right there. That's what I was trying. That's a really long way on that small chart to go without some sort of pullback.
Yeah.
But it's really, I mean, yeah.
And you know, when you're waiting for a trend trade, if you missed it for some reason, you're like, damn it, this Nasdaq is just running without me and I have no way to get in. And now you can use the one down, one up at an area to get into an extra trade or maybe add on, or if you missed, you can get in late.
Oh, yeah, because those anything can happen triggers run forever. Sometimes.
Yeah, and it's really predicated on these two trending together. Once these two are trending together, you get the one down, one up all day long. And there's
Well,
like
the large sharp triggers, I know we call them anything can happen, but they're really, you've
It's
also at times you call them parabolic, and parabolic can go a really long ways.
Yeah, I mean, it went a really long way down, so it can go a really long. Yeah, here's the thing. Get it out of your mind that you know where it's going to go. I mean, we have ideas because we have the fibs, but then allow the market to dictate the rest instead of you dictating it. You know, and again, look, if we were to get divergence from a fib, I would probably be out of the position. You know what I mean? So, because once we get divergence from a fib with weak triggers on the big chart, it's probably over. So look, you have two choices. This is your one down, one up stop. And then watch, let's do a divergent stop. I'll make it yellow if you want. And we'll just,
one of the rules is you said like divergence.
There is divergence
on
already.
a small chart, and also at the outer band on the market flow. Those are two conditions where you might get a stronger pullback.
Yeah.
So you want to be careful about entering there. You might want to wait.
Well, I wouldn't enter it once I hit a fib. So look, if you did a divergent stop, you're out. If you waited for the one down, one up, you're still in and you didn't get stopped out with divergence. Just this is a good exercise to see. So look, you only had to risk 3 more ticks and you'd still be in the position. So if you get out with divergence, I mean, I think you'd be pretty happy making 45 points. But let the market dictate it with the one down, one up, and then maybe you get that extra 9 points or so. Or if you get a second divergence, guess what'll happen? You'll take out the one down, one up low. With a second divergence, it always takes out the one down, one up low. Without it, we make it to the end. Anyway, you know, if you got out with 50 points, I could be really happy with it. You know what I mean? Especially if you know, had the gumption, let's just say, to take that first long off of this area and then add on with a one down, one up, and maybe add on again with a one down, one up. And if you add it on again, I mean, think about how much money that is. That's a ridiculous amount of money. And you never know if it's going to keep going, but with the one down, one up, you get a lot of limited risk. So anyway, I think this is a good example of this towards the end of our session here this morning. So, you know, look, what I want for you guys to do is, you know, just, you don't even have to trade it necessarily or do replay. Just, you know, I mean, you guys are all experienced enough. I'd rather have you do replay and try and trade it and see what you can come up with. With the white paint bar trades and the one up, one downs. I mean, that's basically your primary focus for now. The high volume areas are going to come in and you're going to see them, and it's going to be pretty obvious when you can take them, when the 8 range I say 8 range if it's crude oil, but 21 range triggers are right. The high volume areas usually work well. If you're in a trend trade situation, you just want to wait for the 8-3 triggers to roll up. And it feels late, but getting in at 60 and getting out at 17, it's not that late. So we now hit the last fib, and if we were still one down, one up, guess what? You're still in. And then this is where, you know, worst case scenario, I mean, you never know. I mean, you just don't know. I mean, if you knew, you'd be the only person. I mean, we knew that we might get to 1650, but we didn't know what was going to happen. So the market has basically told us what's going to happen. If you were still long from 60, you'd now be up 65 points. It's crazy, isn't it? And look, worst case scenario, a 2-bar low traditionally, you know, again, we'll see what happens. Usually a 2-bar low is max stop, but if it gets back there, it's just going to be a trend trade. So we'll see what happens. What do you guys think? Pretty cool?
Yeah.
I love the runners. Amazing.
Yeah. I mean, and look, you're going to catch 3 or 4 of them a day at least that go 30 or 50 points on the Nasdaq. I mean, this one's kind of out of bounds and out of control, but you know, but look, this is what I say. You don't know how far it's going to go. If, you know, you have an idea that we're going to make it to fibs, which is the first part, but how many times after a good bottom do you see them break fibs? It happens a lot, doesn't it? So now you have a way to, you know, again, 2-bar low probably won't get taken out. They're not even making a one down, one up anymore. They're just going up. I was trying to wait till this thing ended just so we could say, hey, that's the end of the trend. But we'll see. If we make divergence, that'll probably be, you know, the sign of a deeper retracement. But if we don't, then I guess 37 to 41 is next. Be an 80 pointer. All right. So 2 things I want. Everybody knows this master class is set up for you guys, right? Everybody's in here.
Yep.
So what I want to see is you guys mark up some pictures. Like, here's Jeremy. Let's see what he did just for fun. So he sold a 1-up into the 1-to-1s. So that, I think that was good. And then he chicken shit out of it and didn't leave a stop behind the 1-up, 1-down and missed the rest of it. All right. I say that in all kiddingness because I joke with Jeremy a lot. But anyway, but you see it. Look, he decided it was going to stop. And if you just use the 1-up, 1-down, he was still in and only made another, 75 points to the downside. But this is a really good use of the 1-up into an area. Basically a momentum trade, right? So I think he did a really good job there. I just think his stop sucks. I mean, you leave it up there and you get the rest of the move. But anyway, this is neither here nor there. I'm sure he realized it after. All right, Rain, there you go. Sorry. All right, so let's see what they did. So who is this? Jeremy again. Jeremy posted a lot of pictures. So he used the high volume area and 1-down and got in afterwards. And then he couldn't take it anymore. So he got out at resistance, which is okay. I mean, look, there's no, he should have been long over here and he should have been long over here. And for whatever reason, he's in a little bit late, but obviously still worked out. So he got a lot of it, didn't he? From 72 to 03, I mean, it's still 28 points. So it's nothing to sneeze at. So what, all right. Well, they came back and got a 2-bar low. And now look, this is where you guys would be thinking trend trade, right? Perhaps. And again, I want you to watch what happens with these 8-3 triggers. If we get into them and make a close down, watch how nasty they'll get to the downside. If they close up, they'll probably keep going. But, this is traditionally where right here, you're going to make a second divergence to the downside. You can't see it yet. And they might. I mean, the large chart's still very favorable for going up, but this is really the spot right here that's going to determine what happens next. And the fact that the 8-3 triggers are down, kind of makes you think they may not finish the move off first. So now, if I was only looking at this chart, I'd be on board with a long trade. I think everybody could be on board with a long trade. I just want you guys to see the difference when these 8-3 triggers don't agree. And again, it could still go up. I'm not saying it won't. I'm just saying it's going to be more difficult for it to keep going up. Not that it won't. All right.
HBA line.
It is. But the triggers aren't going up, so we wouldn't use it. I know this is going to be the hardest part for you guys because you're going to be like, damn it, I know it's going up. You're going to say it in your head. I know it's going up. It's got to go up. And I'm not saying that it won't. If the HVA holds and we close up, then the 8-3 triggers will go up. If they're not going up, we're going to end up making a lower divergence and we'll come down a lot lower. I don't know what's going to happen. I mean, I would lean to the long side just because of this chart. But in all honesty, at noon, if we were long 5 times and we made all that money, probably wouldn't even be looking at charts anymore for the day, to be honest. I know you guys are thinking, oh, it's going to go up anyway. And just keep watching this 8-3 trigger right here.
So if it breaks this HVA line down, would you say that's a good time to sell it?
Hell no.
Hell no.
Why would you sell into support with your triggers above it?
I don't know. Too late. I already did it. I better get out.
Target.
All right.
And I'm not, look, I can already tell you that we were going to go down some more because the 8-3 triggers are down. You guys aren't going to believe this until you see it 1,000 times. And you're going to be like, damn it, I wanted to go long. And again, it's not a short in a support. You can't. This is what Corey did last week. I'm like, why'd you go short? He's like, I don't know. I said, do you see the blue lines there, right? And he's like, yeah. I'm like, you can't trade into blue lines going short.
Does it matter if they turn red after?
I said, you're waiting for the 8-3 triggers to roll up and then you get to go long again.
Which they just did.
Huh, shocker.
Bam. Now it's gonna get stuck in our range.
No, it's going to go to resistance.
38.
And again, look, high volume line. We start closing above. They start rolling up. I mean, at least you have a chance to get up to the 38 area. They don't have to make it necessarily. I mean, if they make another divergence, it'll be over. But, you know, again, notice that the 8-3 triggers are on the wrong side of the small triggers. It's
Right.
a totally different look than over here. 8-3 triggers are above and trending together. It keeps going up very easily. And again, you know, I'm just saying this is where sometimes they end a little bit quicker. You know, it's just like your small triggers being below your large triggers. If it fails, it's, you know, it's probably going to go a little bit deeper. So, you know, even if you went long one more time, I mean, party's over for the moment. So, and look, now that all these triggers are down, it's probably going to go quite a bit lower. This is where they use
to go short.
No, I'm not. Okay, hold on. Would you
I'm
go
usually
short?
early. Yeah.
Would you go short into this look?
No.
Okay, don't forget about all the good stuff we've taught you. Just because you remember,
We're close to the top.
Remember, how do you know?
You don't know.
You don't know. I don't know. You don't know. But I know we're not long anymore because the charts don't agree, all of them. When they all agree.
Okay.
So anyway, look, you can't go short because termination condition, right? There's no room to go anywhere. So, and you can't really go long. I mean, I guess you can go long, but longs are going to be very difficult with the triggers not being right. Again, that was maybe your last hurrah, right, to go up. And I'm not saying they can't go up or won't go up. It's just not easy money for us. But I don't want you guys to forget about this. When you look at this, before today, you guys would bet money that the market would go from 19 up to 42.
Yes.
So don't lose that chart reading ability. All you're doing is waiting for the small charts to agree with what the large charts say. I can't get rid of that arrow. All right, let me. Usually when you draw too much on your charts, that's where NinjaTrader doesn't like it. And again, look, let's look at our smaller charts. Do they suggest we should be going long?
No.
Hell no. So they're not done going down yet. Even though the large chart caused a bounce, which, you know, we kind of expect, you can see our small charts suck for going long. Now, if we were at a really good resistance on this chart, right, if we were at a pivot stop out, fibs and 1-to-1s, then we start thinking about going short over here. Does that make sense?
Yes.
If we're not, so we're not going short, but you can, that's the look for a short if you were at the right top. Does that make sense? It's not the right top on the big chart, so it's not a short. I want to make
There's
sure.
nothing to do right now, basically.
No, you're done. And if you were long from all the right spots,
yeah.
If you were short all the way down to the right spots and then you were long all the way up, you'd be up $4,000 or $5,000 a contract right now.
Oh yeah.
Today. So you wouldn't need any more. You'd be like, let everybody else have these scraps. It's not my money anymore.
So John, if your large chart was at termination and the small chart triggers said down, would you wait and
No,
would you go short because
I'd be
you're
short right
outside the
there.
outer band?
Well, yeah, it's outside the outer band too. So you're correct on that. I wouldn't go short for lots of reasons. The large chart says no, we're outside the outer bands, but hypothetically speaking, if we weren't outside the outer band so far and it was a really good top, this is the look for the white paint bar trade.
Especially if that became a breakout trade down, it may be, if the large chart agreed, yeah.
Yeah. But because it doesn't agree, you can't really do it, but it still doesn't mean it won't go down. It can still go down anyway. I mean, that's the look for down, whether you like it or not, right? So anyway, you're not long anymore and you're not thinking about going long anymore. So that's half the battle.
So you don't want to go short because we're above the outer band?
And we're into a fib. I mean, this is a fib on the big chart.
Yeah, I don't know.
So we're not going short into fibs and we're not going long into crappy triggers. So
But you would not want to go short until we're below the fib and the outer band.
Or I wouldn't want to go long until we break the high volume area with strength and have our triggers rolling up.
Okay.
Because the next fib on the big chart is up here, if I'm not mistaken.
Oh, yeah.
So
I've never been paying any attention to the outer band, didn't even know it existed.
well, now you do.
Now we do.
And again, look, look, this would be a high volume area breakout, assuming we get up. Then, that would probably continue this move up to where it's supposed to go. And then the small chart would be back in alignment with the large chart and it'd probably finish the move up.
Yeah, this is normally where I get chewed up and lose all my money.
Yes. But with a couple little rules like a high volume breakout or 8-3 triggers rolling back up again, keep you out of trouble. And you're not going long into this because another down bar and they're going to keep going down. So another up bar, they're probably going to go up, and another down bar, they'll probably go down. So it's like really at a decision point. I'm leaning towards up because the large chart. Does that make sense?
Yeah.
Yeah.
I mean, I'm leaning towards we're going up to 42.
Well, everything's so compressed, you just got to let it break one way or another.
You just have to follow the rules.
Yep.
I've given you guys so many new rules, but just to break it down, and I know we're kind of at the stopping spot for today, but white paint bar trades from the really good tops or bottoms or a high volume area. And then one down, one up at an area if you get an area on the smaller charts, or one down, one up after the up bar if everything is trending strong. So there's really only a couple trades that you're doing. High volume areas or white paint bar trades, which are kind of the same thing, same areas. The only difference with a white paint bar trade is you're trading what you anticipate to be the high volume line before it's a high volume line. Does that make sense? I mean, you're basically saying because the bottom is so good that this white paint bar is going to eventually make the high volume area and go up. And sometimes you got to get in early or else, because they don't always come back to the high volume area. So, again, sometimes you have to pay a premium to get in. Sometimes you get a pullback. Again, if it's a really good bottom, it's better just to be in and let it marinate. But again, you're either trading white paint bars up or high volume areas. That's it. And then for trend trades, you're waiting for the 8-3 triggers to roll up. And then trend trades, you're waiting for the 8-3 triggers to roll up. And then same thing again. And then ultimately we made it up to here, and lo and behold,
broke
a high volume area breakout. So I know it's shocking and it feels, again, that's the easier long. And again, if you went long, even one down, go long, now you got to stop, right? You don't have to risk much more than that.
Yeah, right now all triggers agree on all charts.
Yeah, and that is your new free money swan song.
So John, we're adding in those fast small triggers to our trend trays. We want to take them when those triggers agree.
Yes.
And then we're adding in the white paint bar at the reversal to get in before the HVA line.
Yes.
Then we're doing the small triggers in all the trades, and to add with the HVA trades, we're adding the breakout trades. And then
one down, one up.
All triggers are strong. We're using that one up, one down.
Yes, sir.
So that's basically
that's it. That's all of it.
That's a lot, though. I mean, that's awesome.
It's a lot.
You've done a great job.
It's like Corey said. He goes, once you actually go through this class and you spend a day or two, the amount of extra money your guys are going to make is going to be outrageous. But this is not for the faint of heart or new users. You know what I mean? If you don't know termination conditions and trend trades and how to read your triggers, it's a little more difficult. But you guys are in a position where you have enough knowledge now that you can take this and really run with it.
So let's say we missed this white bar, right? Just now. I would wait for this red bar down and make a green bar up and try to get in. Well, after this, whatever.
Let me ask you a question. Don't forget about termination conditions. So
right.
Your triggers are weak and you're at resistance.
But it's technically not a good top, right? Because everything busted through.
No, you have weak triggers at Fibonacci resistance.
Okay.
So
and we have divergence.
Plus you got divergence on the small chart.
I don't even need my small
and
chart.
I got a bar on the market for
a bunch of blue lines with the triggers going up. It's probably going up. Weak triggers with a bunch of red fibs. It's probably going down. I know it's hard to believe, but it's true. After all these years.
But we're always John. We're always using that large chart, right? We don't do a trade without it, and we don't do a trade against it, right?
Yeah, I mean that's the whole point. Is the market flow chart is your third chart. You still have to watch these charts, obviously, and pay attention. But again, look, we just hit termination, divergence, weak triggers. There's no more reason to be long. It's over. We were long.
But when do we go short? Do we go short when we see a white paint bar and 8-3 triggers roll down?
Yes.
Okay.
So how close are you to those 8-3 triggers rolling down right now?
Not really.
Not even close. Not even freaking in the neighborhood yet. So you don't have to worry about a short. Now it's probably a top because the fibs are kick ass, and when there's weak triggers, they usually hold. But it's not a short yet. So
they'll probably come down to HBA line and go back.
This is where they come down and then they go back up again, and then the triggers start to roll over, and then eventually when it's right, it'll look right.
Yeah.
I just like the fact that I know not to do anything right now. Like, instead of I'd be thinking, oh man, there's a divergence. There's this, there's that. Let me sell this thing, let me sell this sucker and put my stop behind the divergence. Now I got a 6-point stop or whatever, and I'm risking my ass, and I don't know even what's going to happen.
And with these triggers, the chances of it going up and making a pivot stop out are about 90%. So you probably are going to go back up and test it again.
You get stopped out.
And you get stopped out. And then usually after the second test, then you'll find out if it's going to be a top or they keep breaking out. So again, right now, look, you've got 1-to-1s, fibs, mid bands, triggers up, and strong triggers here. You're not going long. You're not going short, but you're not going long either. So this is the battle zone where you just let them work it out.
Awesome. will we be able to see this video today? Can
Yeah.
I watch it again later? Okay, great.
Yeah, here, watch. I'll stop this. Let me stop the video, and then you guys can go back and rewatch it again. I think this is a pretty good session for day one.
Yeah.
It's a lot. It's a lot to take in one day. Where the heck?
Yeah, I was watching it over the weekend and I was thinking how great it was. I had it down pretty good. And then when I started getting all these add on these different types of trades, then I got confused to which trade is which. But
Right.
that's where the practice has got to come in.
Yeah, well, this is where we're gonna do this for 4 more days straight.